Wayne?
Yeah, what I've said in the past is that I didn't think the place to have this fight was on the speaker election back in January. I also didn't think the place to have this fight was on the debt ceiling a couple of months back. This is actually the place to have a fight. This is all that matters, right? The spending bills are all that matters. As you're already learning, promises made 3 weeks ago are not worth anything in Congress. You could promise to spend more, you could promise to spend less. And all that really matters is whether or not you can get a majority of votes for this particular spending bill or that particular spending bill. This is going to be where the battle is. And at the end of the day, it probably is where it should be. I think Kevin's probably at his highest level of risk here right now. But that's the right place to have it because, again, a shutdown is not that big a deal. And I think Kevin might have to go through at least a little bit of a shutdown if for no other reason to establish some bona fides with the conservative wing of the party.
Wow. Well, look, if we're talking like this now, Mick, does that mean that your former Freedom Caucus, which I know you do not always agree with right now, I know you don't love necessarily the contours it has taken on, it is in fact the most powerful element in the U.S. House?
See, it is and it isn't, and that's the whole thing that makes me pull my hair out, is that the whole reason we started the Freedom Caucus so that we could speak with one voice. Right now, you've got a group of people out there saying, well, if they don't get an impeachment proceeding, they're not going to vote for the spending bill. There's folks saying if they don't get a border bill, they're not going to vote for the spending bill. There's folks saying if they don't get lower spending, they're going to vote. They won't vote for a spending bill. The whole idea behind putting the caucus together was so that we didn't have this exact sort of situation. So this is not a Freedom Caucus-driven revolt any more than the opposition to Kevin in January was a Freedom Caucus-driven revolt. There's roughly, at any time, about 40 members of the Freedom Caucus, and 15 of them voted against Kevin, which means a majority of the Freedom Caucus voted for Kevin back in January. So, look, it's difficult anytime you've got a 5-vote margin. Nancy Pelosi struggled with this. She did not face the motion to vacate the chair because she changed the rules. But this is a dynamic that is facing Kevin McCarthy, and my guess is we'll face speakers for the foreseeable future.
Do you think there is even a realistic scenario, any card that McCarthy could play that would satisfy everyone? It just feels like he's tried to float many trial balloons, be it related to the border or Ukraine funding or even an impeachment inquiry potentially as is being floated, but nothing really seems like it's making a difference.
Yeah, it's really, really hard because, again, you might be able to float an idea on something like an impeachment inquiry, which is not the same as an impeachment, and that might satisfy some folks. But what about the people who want the border? And what about the people who want less spending? It's going to be difficult for Kevin to cobble together the votes. My guess is, at the end of the day, he'll have to rely to some extent on some centrist Democrats, which means, in my mind, probably not impeachment, probably not spending, but maybe the border might be the sort of the path where he can carve out a majority to get a spending bill. But again, I don't think that happens until after the September 30th deadline has come for at least a short period of time.
I have to ask you about what's going on the campaign trail while you're with us, Mick Mulvaney. It was all about the football game in Iowa over the weekend. Just listen to Kaylee. So we've got, this is going to fall Donald Trump here. I hope we're getting on the plane with Mick or whatever's happening there. So this is Donald Trump at the football game, and it's what made a lot of news because you could hear people booing as he walks into the stadium. Not great, I guess, if you want to be loved.
Yeah.
He's waving, and there's, look, how can you tell there's booing and cheering?
Right,
I don't
it's just
know.
noise.
There was a forest of middle fingers in one picture that I saw, but he shows up at a frat house on campus before the game. A little bit of a different sound. He walks out onto the deck where they're cooking burgers. He takes the spatula, he starts flipping burger. Well, at least he held it up. I don't know if he knows how to flip a burger. And listen to these guys sing. I hope that I don't have to, there's swears in this, I don't think so. But, this is the photo opportunity for the ages. Mick Mulvaney, which one are we supposed to read into? The booing at the football game or the love at the frat house? And why is Donald Trump hanging in frat houses?
Because it's cheap, to be honest with you.
Okay.
You're not seeing him out on the... No, I'm dead serious about that. You're not seeing him out on the trail much doing these large rallies because they're expensive. There's a reason he's staying away from the primary debates. We talked about that. That's smart from a short-term perspective in the primaries. But my understanding is that they are having difficulty raising money that they can put towards the campaign, that the lion's share of the money is now going towards the legal defenses for the president and his cohorts and so forth. So you're seeing this low budget stuff, which is fine, by the way, because if there's a couple of places you can do a low budget campaign, it's Iowa, New Hampshire, and South Carolina. It's one of the beauties of our electoral system. You don't need to have a lot of money. Nikki Haley's doing well in Iowa without that much money. Chris Christie's doing well in New Hampshire without that much money. But that's the reason you're seeing it. Do I pay much attention to the booing and the shouting and yelling? No, I don't. I pay a little bit more attention to the polls. He's still dominating in the Republican primary and still going to continue to run close with Joe Biden in a theoretical head-to-head, but I still think electorally he will suffer and is certainly the underdog going into 2024 against Biden in that theoretical matchup.
You know, we're all out of time, Mick Mulvaney. Should Donald Trump have shown up at ground zero today like Ron DeSantis?
It wouldn't have hurt. And he's local. I mean, so it would
Surprised
not
he wasn't
hurt
there
at all. Yeah.
Rudy Giuliani was there, for crying out loud. Mick, it's great to have you. I hope you made the flight or whatever. Come see us in person next time. We were lucky to have him with us in studio last week. Mick Mulvaney, the former acting chief of staff of the Trump White House, former congressman, former member of the Freedom Caucus. Interesting on Kevin McCarthy, because last time we spoke, he thought McCarthy was safe.
Yeah, that he was solid all through the debt ceiling fight, which of course proved to be true. He is still Speaker of the House. But the fact that Mick Mulvaney thinks now is the highest point of risk for Kevin McCarthy just speaks to the challenge he is facing as he returns to D.C.
Yeah, check out Chip Roy's Twitter feed, and you'll know where he's coming from, I guess. I wonder what Jack Fitzpatrick has to say about that. We're going to find out next. Our appropriations chief from Bloomberg government is coming in next. I'm Joe Matthew with Kaylee Lyons. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 approaching 4,500. NASDAQ 100 index now up by 1.2%. Stocks are gaining ahead of economic data this week that will help shape Wall Street's views of how close the Fed is to ending its rate hikes. The S&P up 29 points, now up by about 0.7%. The Dow up 107 points, up 0.3%. NASDAQ up 158, up 1.1%. Bitcoin briefly dropped below 25,000. Right now, Bitcoin 25,171. Bitcoin is down 2.5%. 10-year yield at 4.27%, with a 2-year at 4.98%. Spot gold up $3.50 the ounce to $19.22, up 0.2%. And West Texas Intermediate crude is down 0.4%, $87.12 a barrel on WTI. JetBlue has agreed to transfer some Spirit Airlines gates and flight slots at 3 airports to help lessen antitrust concerns over its pending acquisition of the low-cost carrier. JetBlue will shift all of Spirit's holdings at Boston Logan International and Newark Liberty and part of its assets at Fort Lauderdale Hollywood International in Florida to Allegiant Travel. JetBlue shares, they are trading lower now by 0.3%. Spirit up by 11.7%. Allegiant up by 2.4%. Again, recapping, we've got stocks higher. S&P up 29, up 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Keely Lines on Bloomberg Radio.
We already knew this could be a dicey week or a couple of weeks for Kevin McCarthy. After hearing from Mick Mulvaney, though, we're genuinely worried about the speaker. Mick has been telling us to calm down about this whole motion to vacate, that actually following the debt ceiling deal, he's kind of a made man, but very different tune today.
Highest risk right now is where he sees the House Speaker.
As opposed to like the day after he got the gavel.
Right.
That's pretty amazing. Or in the throes of the debt ceiling debate. It gives you a sense of what might be coming. And this is like Christmas morning. Well, today's Christmas Eve, I guess.
Yeah, exactly.
Jack Fitzpatrick, right?
Yeah, they're all riding in on their sleighs.
If you're like the appropriations
back to the
guy, Jack knows this better than anyone. Tomorrow is when you sink your teeth. You open your gifts, or you begin opening them, whatever. I'll stop with these awful metaphors. Jack Fitzpatrick, Bloomberg Government, great to see you. As everyone seems to think they know as much or more than you do about government shutdowns and all the rest of it, how much of this is predetermined? Because it does make me wonder when the conventional wisdom is the government's about to shut down. They haven't even started negotiating this yet.
It does not seem predetermined right now. When the House comes back tomorrow, I think we'll get a better sense of how many conservatives are really itching for a fight and exactly what kind of fight they're itching for.
Yeah.
Is it that some people want to see a shutdown? And if so, over what exact issue? There have been hints at, Texas Republicans saying they're not going to vote to fund the Department of Homeland Security unless they get some border security measures and or get Alejandro Mayorkas to step down as Secretary of Homeland Security. Is this a Homeland Security shutdown fight? Is the focus going to turn more towards Hunter Biden and an impeachment push by a certain wing of the House Republicans? At this point, they haven't really preemptively justified whatever action they're going to take. And by they, I really am looking at the Freedom Caucus and the conservatives in the House Republican Conference. So I don't think anybody knows exactly what's going to happen. There's a pretty negative mood as to the likelihood of a shutdown. Does it happen on the September 30th deadline?
Right.
Do they get a stopgap and then there's a bigger fight in November or December? I don't know. I think we have to, I think a lot of House members have to come back into town and just suss out what exactly is the big fight that's about to happen.
Right. And then I guess the other question is, what is the course of action? Because as you say, maybe a stopgap is what they're going to go for here, just a continuing resolution. Do you then instead focus all of the energy on getting that done? Or do you try to pass, the 11 spending bills that you have to pass? Which takes priority?
They have to try a few different things. There are several bowling pins they have to juggle. Mm-hmm. One, our colleagues, Eric Wasson had the story last week that Kevin McCarthy is at least considering a plan to take this proposed Ukraine aid and instead of attaching it to a supplemental, a continuing resolution to avoid a shutdown, putting it onto a border security bill, a controversial one with no Democratic support. So there are questions about, does Ukraine aid get tied into the question of avoiding a shutdown, or does it get tied onto something completely different and more controversial? They both, the House and Senate, need to work on their basic funding bills because eventually they're going to have to negotiate a final deal, and one side is going to have more momentum than the other, and you get that by holding votes on your bills. But they also do ultimately need to pass a stopgap measure, regardless of what is attached to it, that both chambers need to clear time between now and September 30th, which is coming up, to make sure that there's not a shutdown.
So what can realistically get done in the House here? If the Senate's cleared 12 bills through committee, the House has one. Are they going to get something moving in the next week or two to be able to say, hey, Chuck Schumer, we've actually made some progress here, let's talk?
Right. So the House has gotten all of them out of committee without a single Democratic vote. That's the problem with the House ones. They have passed one on the floor, also without a single Democratic vote. They're going to take up their second one this week, the biggest one, defense appropriations. That's a big one. Again, that got through committee, but without any Democratic support. Meanwhile, you see the Senate going in a very bipartisan way. They are bringing up three of their least controversial bills that were reported out of the committee unanimously. So both will make gradual progress. The fact that the House has only done one on the floor and is doing one more, and they're not packaging a bunch together, means, by September 30th, they can only have passed so many. Maybe they'll do another one the next week.
One or two.
But they will not make a ton of progress towards 12 bills. And soon enough, the focus is going to have to turn toward a combination of a stopgap measure and saying, all right, are we going to have this fight in November or December, or when exactly, and the questions about Ukraine aid, disaster relief, and the extras that have to come up.
So how long does it take to pass just one of these? And when we're thinking they have, 11 legislative days upon their return tomorrow?
They are probably not going to move very fast because one of the promises that Speaker McCarthy made to become Speaker was there are going to be tons of amendment votes. They come as close to a truly open rule about as you can hope in the House. In the Senate, the Republicans are pushing for a lot of amendments as well to be considered germane, and the Senate's the Senate. If one person wants to slow things down for a full week, they can. So we've got this week. Next week, they could probably do one more package or individual bill, both in the House and Senate. After that, they're really not going to have much time other than for the immediate continuing resolution.
Adding to the vitriol around here is Tommy Tuberville and his...
Speaking of one senator can hold things up.
His lone senator's blockade against military promotions. More Republicans are starting to make noise about this now. Not just some of the folks we'll talk to on the air. Lawmakers can get really animated, but usually it's Democrats. Certainly the White House has been pushing back. Now it's Michael McCaul, who chairs the Foreign Affairs Committee, talked about it on Sunday morning. Let's listen.
This is paralyzing the Department of Defense. The idea that one man in the Senate can hold this up for months. I understand maybe promotions, but nominations is paralyzing the Department of Defense. I think that is a national security problem and a national security issue, and I really wish you would reconsider this because we're working this issue out in the National Defense Authorization. We worked it out on the House side. We're going to conference in the Senate. We're going to work out this, abortion issue that has been a tradition within the NDAA.
Again, Tuberville is opposing the abortion travel policy at the Pentagon. And I do want to note for our listeners and YouTube viewers that Congressman Michael McCaul, will join us tomorrow on Sound On to talk about this at 1 p.m., roughly 1 p.m. Washington time. Is this going to play out, Jack, during the budget debate? At some point, they have to deal with Pentagon funding. Does that happen then?
It doesn't seem that there's a solution to the Tuberville hold through government funding. You can have people like Michael McCall and other military-focused Republicans in either chamber speak critically of this, but there has not been some crackdown on Tuberville by leadership. It's been more those somewhat oblique critiques rather than nobody's threatening to take his committee positions away or something like that. He seems to be waiting for Democrats to offer some concession, and Democrats are absolutely not going to. Chuck Schumer just said last week, this was started by Republicans. They need to finish it. They are not going to reward him for those tactics. So until you see something from leadership really pressuring him, or maybe if he gets really bad polling figures back, Tuberville seems to be very much dug in on his position.
I was going to say, he says his constituents are with him on this. He's doing what they want.
Completely. And that may not change either. The point is, though, Kaylee, nobody seems to see how this ever ends.
Right. It's just a game of, I don't know if it's chicken or just a staring contest.
Yeah.
But both thinking one side is going to blink, and both sides to this point saying, well, it's not me that's blinking, it's you, and yet it hasn't happened yet.
I think it was Wesley Clark suggesting on CNN over the weekend that the Biden administration start withholding federal funds to Alabama for certain programs. I don't think politically that's a great option for Joe Biden right now, is it?
Well, the Space Force headquarters announcement moving it to Colorado was seen,
nobody wants to admit
by
that
Alabama Republicans, at least was seen as tied to that. So we
asked Senator Michael Bennet about that just last week, the senator from Colorado. He's keeping Space Force, or Space Command, rather. And he said, no, that's because Colorado's great, which I guess is his job to say.
No Democrats in the White House are not going to say this was retribution, but it does not help Alabama to have this Tuberville.
Perception's everything.
And the timing of that decision would make it seem quite punitive, right?
Yes.
Not that we know anything about that. All right, Jack, great to see you. Thanks for coming over from Bloomberg Government. A block away on K Street, Jack Fitzpatrick setting up for the return of the House tomorrow, which we'll be talking a lot more about. Let's get you up to date on world and national news right now. Nancy Lyons joins from the Bloomberg 99.1 newsroom in Washington. Hey, Nancy.
Thanks, Joe. A new COVID-19 vaccine is just a few approvals away. Today, the FDA okayed a reformulated vaccine that targets an Omicron subvariant. The shots are manufactured by Moderna and Pfizer. The CDC will now need to give its okay and its recommendation on who should receive this latest shot. The agency's advisory panel is meeting tomorrow. Special ceremonies are being held today in commemoration of the 9/11 attacks. A choir sang at the Pentagon after the names of the victims there were read, and families gathered at the 9/11 Memorial in New York City and also read the names of those lost in the attack on the World Trade Center.
James Marcel Cartier,
Sharon Ann Carver,
Vivian Kasaldik,
John Francis Casaza.
President Biden is returning from a trip overseas to India and Vietnam and will meet and speak with first responders and their families during a stopover in Anchorage, Alaska. New Yorkers are hoping Aaron Rodgers will transform the Jets. The former Green Bay Packer will be making his Big Apple debut tonight.
It's an exciting team, and the team is ready. I feel like we just needed something to galvanize. I'm not saying I'm it. I'm just saying there's an energy that's kind of surrounded me, and the team has picked up on it.
Rodgers will have some familiar targets on the field, like former Packers Alan Lazard and Randall Cobb. The New York Jets will be hosting the Buffalo Bills on Monday Night Football to cap off the first week of the NFL season. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ are all higher. Right now, those shares of Moderna and Pfizer are lower. Today, regulators did approve updated versions of the COVID-19 vaccines made by Pfizer and Moderna as hospitalizations tick up in a late summer surge of the virus. Moderna down now by 0.9%. Pfizer shares, they are lower by 0.8%. Stocks are gaining ahead of economic data this week that will help shape Wall Street's views on how close the Federal Reserve is from ending its rate hikes. The dollar fell. Bitcoin briefly dropped below 25,000. Right now we've got Bitcoin at 25,211. Bitcoin now down 2.4%. S&P up 29, a gain of 0.7%. The Dow up 107, up 0.3. NASDAQ up 156, a gain of 1.1%. 10-year yield now at 4.28%, with a 2-year that's yielding 4.98%. Investors are looking ahead to Wednesday's key reading on inflation when we get the CPI report. David Leibovitz is global market strategist at J.P. Morgan Asset Management, and on surveillance this morning, he characterized rising prices like this.
I oftentimes think about inflation as being like economic sweat, right? You end up with inflation when you're running an economy above its trend rate of growth. We estimate trend in the United States is somewhere right around 2%, and so the 2% plus growth that we've seen this year, we believe is going to make it a little bit more challenging for inflation to get back to where the Fed would like it to be.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Apple is extending an agreement to get modem semiconductors from Qualcomm for 3 more years, a sign that its ambitious effort to design the chips in-house is taking longer than expected. Qualcomm up by 4%. Apple shares holding on to a gain of 0.7%. Spot gold up $2.72 the ounce to $19.21, up 0.1%, while West Texas Intermediate crude is down 0.2%, $87.30 right now for a barrel of WTI. Again, recapping stocks pushing higher. S&P up 29, a gain of 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
It's hard to tell what's happy talk and what is not right now. There's a lot of angry talk as well, for that matter, between the UAW and the automakers, GM, Ford, Stellantis. We see the headline now, Kaylee Lines on the terminal. The Biden administration expects a deal between the UAW and U.S. automakers. Wally Adeyemo was on TV earlier today, the Deputy Treasury Secretary, speaking optimistically. We've talked to the acting Labor Secretary about it. They're not getting involved, at least not yet. And you do wonder what's up with the optimism, unless they're just trying to project a positive vibe here.
Yeah, unless they know something we don't, Joe.
Right.
Because we are talking days. Days. September 14th, 11:59 p.m.-ish is when there is a deadline here. If they don't reach a new contract, then potentially 150,000 of these workers could strike all big 3 automakers at the same time, which would be an unprecedented move. And to this point, the two sides, to our knowledge, remain very far apart. You have the UAW, which has asked for a 46% wage increase, and these automakers are returning with something in the ballpark of 14.5% in the case of Stellantis.
Different universe.
There is a big gap there.
Which is why they're trashing the contracts publicly. At least that was the case for Ford. The UAW, another story on the terminal, says it's ready to negotiate 24/7 with the automakers. The rest of this week ought to be something. Are you booked for TV at 12:59 or 11:59 on Thursday?
Don't put that idea in management's head,
I just
Joe.
assumed that was the case already.
Ask David Welch.
I bet David is, as a matter of fact. Want to talk to Bloomberg's Detroit bureau chief, David Welch. David, thanks for coming on to talk to us here. Does the Biden administration, to Kaylee's point, know something we don't? What's with the optimism?
Well, if you read what they said, they didn't actually say when they would get a deal. They just said they'd get one. And I can guarantee you that they're going to get one. I just can't tell you if it's going to be before the strike deadline or 3 days or 3 weeks or 3 months after the strike deadline. And I'm being a little bit facetious, but they really didn't give us, they didn't say they were going to avoid a strike or anything like that. Maybe that was the implication, but the union's still saying that they're pretty far apart. Now, look, there are people, the Biden administration has Gene Sperling, a former economic advisor to Bill Clinton and Barack Obama. He's not a mediator. He's not at the table right now. There is informal contact between Sperling and the union and maybe the companies. And so they may have an idea that things are moving along. But, there are some wild cards here. I think they'll come to a deal on pay. I don't think that's really the big issue. The big ticket item that the companies will not budge on is reinstating for workers hired after 2007 defined benefit pensions, the guaranteed pension plan from the years of old. That's an item that racked up, billions, tens of billions of dollars in liability on the balance sheet for these companies and played a big role in GM and Chrysler going bankrupt. They're not going to go back.
Well, David, to that exact point, I know you were reporting on this research from Anderson Economic Group, which is an economic consultancy that's based in Michigan, that essentially said just a 10-day strike on the big three could have an economic cost of $5.6 billion. But I thought it was interesting that Anderson also said it might actually be a bigger risk if the companies agree to what the union is asking for because of that very reason you were just laying out.
Yeah, it is. Look, GM, Ford, and Chrysler are estimating about $80 billion per company in costs if they add all of that stuff in there. Now, that's throwing everything, including the kitchen sink, from the union's demands into their costs. And GM, I think it was closer to $100 billion. But most of that is in the way of these retiree costs. It wasn't just pensions, but it was also guaranteed retiree health care. All that stuff's hugely expensive. You start, and they have to set aside money for it, and that's something that they're really, really going to want to avoid. There may be some other things they could do. Maybe they can enhance 401ks, stuff like that. But once you give a pension, even if it's a lousy one, every negotiation the union will be asking for them to enhance it, and that's what the company's management really wants to avoid. Think about this: one of the big issues is cost of living allowance or inflation protection. The companies want to give workers just a bonus check every year to offset inflation. The union wants an actual percentage matching inflation into their pay. Why do they want that? Because it compounds every year and it is effectively a raise. So all the raises are kind of built on top of that inflation protection money every year. So it's tantamount to a new raise on their pay. The companies don't want it to be structurally put into their labor costs that way. They'd rather just write a check. Or one of the negotiators for the companies told me is they would rather pay for this out of their balance sheet than their income statement.
Mm-hmm. Just have a minute left, David. I'm just curious to the extent that you've covered this and interfaced with Sean Fain, the head of the UAW. Is this about a deterrent, or does he believe an actual strike helps the hand of the union?
No, Sean's gone back and forth on this. At first he declared war on them and said he was willing and threatened to strike them. Now he said that his intention is not to strike. I think he's gotten the rank and file union members riled up. And he has, since he was a reform candidate and won by a very narrow margin, he has an obligation here to come back with a good agreement. And I think he is definitely willing to strike and may even do it to make a point to get more out of them. He can't strike forever, but I think he could have even a bunch of 3 short strikes just to make a point, show that he's fighting hard, and to maybe get a few more pennies here and there, a few more dollars at the bargaining table.
David, just quickly, 20 seconds. Do you think it's still likely they could strike all 3 at the same time, or is the focus narrowing on one?
It's possible. I've sort of, asked me to throw at a dartboard here, but with 10 seconds left, I'd say he might settle with Ford, strike GM briefly, strike Stellantis for a long time.
Wow,
all right, thank you.
That was really impressive.
That was a tough ask.
We got enough time left over to talk about what a good job you did, David. David Welch, Bloomberg News Detroit Bureau Chief. Great to have. We should have David on every day this week. Can you imagine the city of Detroit? Thursday
on tenterhooks, I'm sure.
Absolutely. My goodness. Thank you, David, for the insights here. It is interesting to consider. This could mean different things for all 3 of these companies. We talk about it as the auto sector, but there are actually important differences between them that we should be drilling down on. Kaylee Lyons with me here in Washington. This is Sound On. I'm Joe Matthew. Thanks for joining us on the fastest show in politics. Some final thoughts ahead as we prepare to hand the baton to New York. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Morgan Stanley says Tesla's Dojo supercomputer may add as much as $500 billion to the company's market value through faster adoption of robo-taxis and network services. Analysts led by Adam Jonas say Dojo can open up new addressable markets just like AWS did for Amazon. Tesla shares, they're up now by 10%. J.M. Smucker has agreed to acquire Twinkies maker Hostess Brands for about $5.6 billion, furthering a growing consolidation trend among the companies that stock these shelf-stable aisles at the heart of supermarkets. More of the story from Bloomberg's Kimberly Adams.
Charlie, the price represents a 22% premium to Hostess's closing price on Friday. Hostess owns some of the biggest household snack brands in the U.S., including Ding Dongs and Zingers, as well as a variety of Boardman cookies and wafers. Shares of Hostess brands have surged more than 26% since before July 25th, when Reuters reported the company was exploring a sale after fielding takeover interest from major snack food makers. J.M. Smucker was founded in 1897 and now run by the fifth generation of the Smucker family. It's best known for its namesake jam and jelly, Folgers coffee, and Jif peanut butter. care. It also makes Carnation evaporated milk and Milk-Bone dog treats. Charlie?
And that's Kimberly Adams reporting. Right now we've got Smucker down by 6.8%, but shares of hosted brands, they're up by 19%. Those are our top company stories.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
We're live from Washington, and we'll be passing the baton up to New York in just a couple of moments for Bloomberg Business Week. Thanks for joining us on the fastest show in politics. I'm Joe Matthew alongside Kaylee Lyons. Let's keep you up to date now with a check on world and national news. Nancy Lyons has that for us in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. The FDA today has given a thumbs up to the latest round of COVID shots. Bloomberg's Nathan Hager has more on what's next.
Following that FDA approval for the Pfizer and Moderna shots, the Centers for Disease Control is expected to hold an advisory meeting tomorrow on who should get them. The CDC director would make a final decision, and that would set up shipments of millions of booster doses to pharmacies, clinics, and other health systems within days. The COVID shots would arrive alongside seasonal flu vaccines, as well as inoculations for the dangerous respiratory virus known as RSV that can affect infants and older adults. In Washington, I'm Nathan Hager, Bloomberg Radio.
Today marks 22 years since the deadliest terror attack on U.S. soil, and commemorations have been held at the attack sites in New York, the Pentagon, and Shanksville, Pennsylvania. Defense Secretary Lloyd Austin spoke at the Pentagon.
I know that being here is hard. I know that it aches to remember this milestone year after year, and I know that nothing can make it right.
Vice President Kamala Harris attended the ceremony today at the 9/11 Memorial in New York City. President Biden is returning from an overseas visit to India and Vietnam and will speak this afternoon at a military base in Anchorage, Alaska. Hurricane Lee has grown back into a Category 3 storm with 120-mile-per-hour winds as it spins about 600 miles south of Bermuda. It's forecast to gain strength as it continues to move over the warm Atlantic. The official forecast brings it southeast of Cape Cod in Massachusetts by next Saturday. The death toll is up to 2,500 in Morocco, where a strong earthquake hit Friday. Despite the devastation, Moroccan officials still expect to host the International Monetary Fund and World Bank annual meetings set for Marrakesh next month. The country has spent millions on infrastructure to prepare for those meetings. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe and Kaylee.
Right, Nancy, thank you. I guess, Kaylee, if we've established anything over the past 2 hours, it's that this is quite a week that we're in for here. You know, we made a big deal about the return of the Senate last week. You know, you come back Labor Day, it's sort of like reality sets in.
Yeah.
And while traffic did get a lot worse, and we did have a heat wave, this is the real thing this week. House Republicans and Democrats return tomorrow with no deal in place. In fact, we have no idea what a deal might even look like on funding the government. We've got some important economic data on the way. The president's coming back from the G20, and we're wondering about a strike, as we were just discussing, as soon as Thursday at midnight.
Yeah. It is going to be an insane week, and I don't know which one of those things ranks in terms of higher importance.
That's the issue.
CPI data on Wednesday could mean that the Fed hikes or does not later on this month. An auto workers strike, as we've been talking about on this program, could have dire economic consequences as well if all three are on strike at the same time. And then, of course, there's just the idea that the government could shut down, although that deadline's, at least a few weeks away, not a matter of days.
3 weeks before that happens.
It's all relative, Joe.
Yeah, obviously, there's going to be a lot of bickering that happens in Washington here. A lot of wrangling over the budget. We'll see if the White House wants to weigh in. But it really is. That's just the preliminary part of this. It's the appetizer when it comes to the budget negotiations later on this year, frankly, because they'll probably find a way to kick the can to December. Detroit is what we have our eyes on. There's no escaping that deadline. It's the end of the day Thursday, and something's going to have to happen.
Yeah, so we'll see if a deal can be made. At the moment, it seems like the two sides are very far apart, but the UAW is saying, hey, 24/7, guys. We are willing to negotiate day or night. It's just a question of whether those negotiations can actually result in a new contract agreement in time.
That's right, and still questions about whether we see some mediation here. Maybe it takes a short-term walkout for that to happen, but we'll let you know, of course, as you would expect, right here on Sound On. With Kaylee Lines, I'm Joe Matthew. We'll meet you back here tomorrow. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Hi, good afternoon, everyone. We're live from the Bloomberg Interactive Brokers studio. We're streaming on YouTube and Bloomberg Originals. It is Monday, September 11th, 2023. I'm Tim Stenevec, along with my co-host, Bloomberg News Deputy Team Leader for U.S. Equities, Jess Menton. Jess, how are you?
Doing great. Always a pleasure to be with you while Carol is on vacation.
Yes, Carol Bassler continues to be on vacation. Jess filling in once again today and later this week as well, and we are very pleased to have her. Well, it is a somber day, as 9/11 always is. We're going to pay tribute and memorialize the day, as we do each and every year. This year, this day, we're going to be joined a little bit later by Chief Joseph Pfeiffer. He was the first FDNY chief to respond to the 9/11 attacks. He's also the author of the book Ordinary Heroes, a memoir of 9/11. We are also expecting to hear a little bit later in the program from President Biden. We'll bring you his remarks from Alaska just a little bit later. But the equity market, Jess, you've been all over this today.
Definitely looking at what's happening, particularly in technology. Those shares higher today. Also on the back of what we did hear, Tim, obviously from Qualcomm up after Apple did renew its deal with the company. And of course, it is Merger Monday, a big deal for Twinkie maker Hostess there.
Yeah, we're going to be talking all about that. Plus, what's going on with IPOs in this day and age after ARM's filing S1 earlier this month. The big question is, who comes next? Well, we're starting to get some of those answers. We're going to dive into that a little bit later with Bailey Lipschultz on our equities team. We're also talking all things Shein with the U.S. head of strategic communications for the company. And we've got a brand new book, the author of a brand new book joining us, The Six, the untold story of America's first women astronauts. I'm very excited about this one,
I love this.
Jess.
It's going to be a great one.
Yeah, we got a great one coming up. Let's take a look at the markets. The NASDAQ is higher. Just mentioned tech on a tear today by more than 1.1%. The S&P 500 higher by more than 0.6% right now. The Dow Jones Industrial Average higher right now by just about 0.2%. So far, month to date, Jess, we're still in the red, but it's early in the month. I thought seasonality was supposed to be a thing. What's going on?
I feel like part of it has just been more of a dollar yield type story. But if you look at today, dollar's backed off, obviously, those 8 consecutive weeks of gains there. So when you see the dollar ease up a little bit, that helps support the broader equity market, Tim.
Okay, there you have it. Once again, the Dow up by 0.3%, the S&P 500 by about 0.6%, and the NASDAQ higher by more than 1% right now. Taking a deeper dive into the S&P, we see consumer discretionary on a tear. This thanks to Tesla, which is higher this afternoon, just bringing everything in consumer discretionary higher. Hey, all this to come. First, though, let's bring in our Bloomberg TV colleagues as Bloomberg's countdown to the close. It starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Scarlett Fu. We're joined right now by our colleagues Tim Stenevec, Jess Menton in today for Carol Masser. Welcome to our audiences across all of our Bloomberg platforms, television, radio, originals, and of course our partnership with YouTube, where you can stream all of our wonderful content. Tim Stenevec, including what is, I'm told, the most read story on the Bloomberg terminal today. It's not about stocks, it's not about bonds, it's about a chicken sandwich.
Oh, I'm so glad this is the most read on the Bloomberg terminal. Did you know we're still in the chicken wars? Did you know that?
I did know that.
I thought this was a thing of 2019.
Littered with chicken bones.
I remember this when Popeyes launched its chicken sandwich back in 2019. You had to wait like 2 hours in line. I actually have still never had one.
You would wait 2 hours?
No, I didn't wait. That's why I still never had one. I walk by a Popeyes on my way to and from the subway each and every day, and the line was just so long. And then recently I noticed the Popeyes is closed, and I'm wondering, Jess, I know this is like top of mind content for top of the hour right here. I'm wondering, Jess, if they're redoing the kitchens to try to get in on the chicken wars.
Well, apparently the guests were complaining that orders were taking too long and often were wrong. So that's been a big player of this. But I have to honestly say, usually when I go there, I like more of the seasoned flies.
Well, I'm glad you bring that up, though, because, I mean, this is a good point, right? I mean, part of the story that's on the Bloomberg terminal today is how they're really trying to sort of revamp their kitchens for, I guess, whatever the next era of selling chicken is going to be. But it was a specific acknowledgement, too, of just how unprepared their kitchens were for people like Tim who were lining up for 2 hours for, you know.
Well, they were supposed to get, they thought they would do 60 chicken sandwiches in a day.
And how many do they do? Like
1,000 in some locations.
That's a pretty big miscalculation.
It's a huge miscalculation.
Forgot to carry the 5.
I mean, the people didn't know how good they were going to be, I guess.
Does anyone like it better than a Chick-fil-A sandwich?
Well, that's what the franchisees are looking for right now, Scarlett. They want to be, you know, accurate, quick, and, you know, get that order to you right away, right when you order it. And that's what, you know, Chick-fil-A is known for.
Yeah, I think they need the sauce too. The sauce is the key for Chick-fil-A, right?
It is.
What's in the sauce, Scarlett?
I don't know. That's
Secret
the question.
sauce for me.
There you go.
It's a mystery. All right, well, what's not a mystery is that if there is a UAW strike, we've been talking about this summer of strikes and this threat of a strike.
Pivot, Scarlett.
I know, I had to make a pivot somehow. If it would start on Thursday, and if it does take place, it would be crippling. Crippling not just for the state of Michigan, which according to the Anderson Economic Group could tip into recession, but a 10-day work stoppage could reduce U.S. GDP by $5.6 billion. Now, keep in mind the Anderson Economic Group counts GM and Ford as clients, so they're kind of getting paid to make sure that you realize what the cost is.
Yeah, and it's already on the radar of the White House. The president actually saying he's confident a deal can get done. Remember, Gene Sperling now is sort of acting as the liaison between the two, and I guess Biden thinks that maybe he can work some magic in the similar way that they did when we were dealing with the earlier, well, first the rail strike, and then, of course, the other strike as well. But I don't know. They seem really far apart, guys.
They certainly do, yeah. but Biden and the Biden administration walk a tricky tightrope here, because President Biden, just as recently as Labor Day, in a press release said he's the most pro-union president in American history.
In American history?
That's what he said.
Okay.
And he wants to be it. He said he's sticking to that promise. This came from the White House, but he said that he wants to.
Mm-hmm.
So the question is, you know, how does he support the union in a way that, you know, prevents these economies from going into recession if there were some sort of prolonged strike? Because that would be terrible politically. I mean, think about the states that would be affected by this, right? Michigan, Wisconsin, Ohio, incredibly important states for the next Democrat or for President Biden to win in 2024 if he wants to stay in the White House.
Yeah, and you looking at what's happening with UAW, just threatening that strike against General Motors, Ford, Stellantis, and potentially beginning Thursday if no agreement is actually reached.
Chrysler.
Oh,
the new Chrysler.
Oh, Chrysler. I know that name, Chrysler. They decided not to
they're now one of the big three.
They decided not to do Chrysler or Dodge or
Stellantis.
Just Stellantis.
They went with something more neutral.
Stellantis. It's like a space station.
They got Jeep. They got a lot, Romaine. You can find it on the Bloomberg terminal, too.
Of course
everything
you
that they
I
have.
have one.
I'm going to go get a chicken sandwich. I'm going to go wait in line.
Surprised.
And then hopefully by the time I
We'll
get the
see you in
snack,
2
I'll be back
hours.
here. Okay? And we'll be meeting once again for our Beyond the Bell coverage right here at 4 p.m. We're going to take you through the U.S. market close. It's available on TV, radio, YouTube, also on Bloomberg Quick Take. We're going to take you through the market close in just a few. We'll see you guys a little later. To 0.7%, the NASDAQ higher by 1.2%. As I mentioned, as you mentioned, Jess, stocks kicking off the week with gains. Traders got a lot to, you know, look forward to this week.
It's a busy week.
Yeah, it is. We got U.S. inflation outlook earlier today. We are also tomorrow, I should say actually Wednesday. I'm getting a little ahead of myself.
We did have the New York Fed did have a consumer-related inflation survey, so you're not wrong, Tim.
That's right, U.S. inflation outlook, right? But monthly CPI we're going to get on Wednesday.
Correct.
And that's the one that everyone's waiting for. That's going to provide the latest insight into how much further the central bank may need to go to pull inflation back toward its target of 2%. We've got a great roundtable with us this afternoon. We're going to talk tennis, too. We're going to talk cycling, and we're going to talk economics and stocks. Molly Smith is economics editor here at Bloomberg News. Ed Harrison, senior markets editor at Bloomberg News. Molly's with us in the Bloomberg Interactive Brokers studio. Ed joins us on Zoom from New York City. Ed, I want to start with you and just take us through the market reaction today, the stock market reaction, because we're seeing tech kind of lead the way. Stocks on a tear. Consumer discretionary, I should say.
Yeah, so it looks like we're going from strength to strength these days, and this is the dollar was down. That might have been the genesis of the trade, because overnight we saw some talk about intervention from the Bank of Japan and the PBOC, China's central bank, and that was negative for the dollar, which ultimately is good for earnings in corporate America.
I want to bring Molly into this conversation. And to Tim's point, we do know we're going to have CPI on Wednesday, but earlier this morning we did get that reading from the New York Fed, not as widely, obviously not necessarily market moving, but what was your sort of takeaway when it came to shorter and longer term expectations when it comes to what Americans are seeing and feeling?
Yeah, I mean, I always take any of these consumer inflation expectations measure with a grain of salt. I mean, can you imagine like going to somebody on the sidewalk and asking like, hey, what do you think inflation is going to be in the next year? How about the next 5 to 10? Like, I can't imagine that they have the best grasp on this.
Do you think in New York you just get punched in the face for talking to a stranger?
I would never ask somebody this on the sidewalk, to be clear. But if I did, I would certainly just like take those answers a bit measured. So I'm going to preface that first of all. But no, I mean, there's several different ways. Like the New York Fed gauge is one of them. There are a few others that measure these consumer inflation expectations. The good news is that most of them have all been pretty stable in last several months. And of course, the Fed has been generally they're more concerned with the longer term inflation expectations, but it's not surprising that the near term ones have generally been higher than the longer term. So people do still think that inflation is going to subside more so in the next 5 to 10 years, but the next year out is going to still be a bit higher.
It was interesting too, because in that report, also the share of U.S. households reporting that it's harder to obtain credit than a year ago. Is this something that the Fed, when you think about obviously this aggressive rate hiking cycle we've been in almost close to 18 months now, that they would want to begin to see certain things like this happening?
Sure, yeah. I mean, that is the point of raising rates, right? You're trying to make money more expensive. You're trying to limit how much is circulating in the economy and keep people from buying as much stuff. So that it definitely is the desired and intended outcome there. So, yeah, I think that's something that they would want to see.
Hey, Ed, come on back in here and talk a little bit about seasonality. I mentioned this to Jess earlier because over the last few weeks, we've talked a lot about how, August and September are kind of the doldrums as people, go back to school and start up again, and historically aren't great months for the markets. But if you were to look at today's trade, you'd say, wait a second, those aren't doldrums of anything.
Yeah, I think that it's as we get into September and October, that's where the fireworks begin, especially October. It's because that's when people are back. And so now what we're looking to see is, as we get out of these doldrums, what's actually happening in the real economy. MLive did a survey. It was talking about the consumer, the American consumer. It seems like people think the American consumer is dead, and they've been predicting this for quite some time. And that's what this survey came out saying. But so far, what we've seen, at least from the Atlanta Fed GDP Now number, is that actually this quarter is going to be even better than the last quarter that we saw in terms of growth. So seasonality-wise, I think that through September, it looks better than we would have expected. I think it's after that bad things could happen, and I think that that's where we have to watch out into October.
Ed, I wanted to follow up with you on the MLive survey because I personally found the results quite surprising, especially with how much talk we've heard from everybody rolling back their recession forecast, saying that the consumer is doing great. They're holding up so well with, how persistent inflation has been, that borrowing costs going up, staying elevated for, quite some time. Yes, resumption of student loan payments is going to hurt a lot of people, but a lot of people have also been saying at the same time that it's going to be strong enough and we're going to withstand a recession. So seeing this MLive survey today, I was like, where is all of this pessimism coming from? I found it personally kind of surprising.
Yeah, I don't know where it's coming from, whether we have a selection bias of pessimists on MLive or not, but it does show you that there is an undercurrent of people who think it's too good to believe what we're going through right now, that as good as it is right now, there's some sort of payback that's coming down the line, and that this is the season for that payback to occur, moving from the summer into the fall.
Okay, speaking of payback, I'm going to do a hard pivot to tennis right now and just mention one word, Coco.
You think it's payback?
I mean, she said, I love how she thanked the people who didn't believe in her.
That was really
speech.
Special. Some heck of a speech.
She's amazing.
Incredible.
I mean, Molly and I were in text touch all weekend as we were watching these matches. But Molly, I mean, what did you make of Coco's match on Saturday?
I mean, I think it's definitely been her summer. You know, she won 2 of the biggest tournaments leading up to the U.S. Open and then culminating with this victory, her first Grand Slam. And it's, I think she was, the odds makers' favorite for most of the tournament, and it was great to see that actually come true because women's tennis can be so unpredictable.
So how does she keep this momentum going? Because there have been so many winners of the U.S. Open who've been women who have just gone off, and sort of like some are not even playing anymore over the last 10 years. Some have fallen so significantly in the rankings. I mean, how does Coco make sure that she continues with this momentum?
I think, that's the thing that's a little bit tough about maybe finding your form at this point of the season because the season is now kind of wrapping up. Yeah. So there's not as many tournaments now. She's going to be obviously in the running for the year-end finals. So that's where the top 8 will face off, and I think they just decided on Cancun for the WTA finals. So,
you might have to go.
Yeah, maybe we'll have to go.
Sounds like
but yeah, she'll be down there, and I think that'll be obviously a great way to cap off the year if she can keep it going through then. But otherwise, it's really just putting in the hard yards in the off season and teeing up for Australia in January.
Hey Ed, I'm going to switch things up. What about cycling?
Yeah, so I mentioned to Tim, since I know that he's a big cycling fan. He does a lot of indoor cycling, I know as well.
Yeah.
And I think it's a really feel-good story what's going on right now. A lot of people don't know because they think the Tour de France is what cycling's all about. But there are actually 3 so-called Grand Tours, one in Italy, one in France, and then around this time there's one in Spain. And the one in Spain is being led by an American who's like what we would call a domestique. That's a guy who is like the workman who helps the leaders. You don't expect him to win. He's actually winning, and potentially this guy Sepp Kuss, he could win the whole thing, and this would be the biggest outsider in quite some time.
And he's doing this after really working so hard for Vingegaard, back in the Tour earlier this year. It's pretty incredible.
Is this La Vuelta?
Yeah, this is Vuelta.
Okay.
La Vuelta, España. Very good. Yeah, exactly. That's the one.
I keep up on some things that are not economy in tennis. Just a few.
No one's talking about this, but if he wins, I think he's going to be the next big phenom in American cycling.
I mean, if this happens, Ed, then, do you think we see some sort of repeat of what we saw during the Armstrong years, where we see this actually huge influx of interest in cycling? Americans are just not into cycling, I think it's fair to say.
Yeah, I think that people are a little bit jaded now as a result of the whole doping that came about. But this guy, he's such a charismatic, just happy-go-lucky guy. I think he's the sort of thing that cycling needs, and I think that yes, he could be a boost for cycling in the U.S. So another great sport. And it's a great way to get out there and do some exercise. Obviously,
I love it. All right,
guys,
we turn this from the economy and markets into sports talk radio this afternoon. Big thank you to both of you for joining us. Molly Smith, she's economics editor at Bloomberg News, senior tennis correspondent as well. Ed Harrison, senior markets editor at Bloomberg News, also senior cycling correspondent today as well. This is Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 approaching 4,500. The NASDAQ 100 index holding higher by 1.2%. And this update is brought to you by Glenmead. Glenmead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. The Dow, the S&P, and NASDAQ are all higher. Stocks are gaining ahead of economic data that will help shape Wall Street's views on how close the Federal Reserve is from ending its rate hikes. We had Bitcoin falling below 25,000, right now just above that level. 25,078 on Bitcoin, lower now by 2.8%. S&P up 30, a gain there of 0.7. The Dow up 85, up 0.3. NASDAQ up 165 points, up 1.2%. 10-year yield 4.28% with a 2-year 4.98%. Gold up $3.50 the ounce to $19.22, a gain of just about 0.2%. West Texas Intermediate crude lower now by 0.3%, $87.25 a barrel on WTI. The next big economic event for financial markets will come Wednesday when we get the latest reading on consumer prices. Investors will be digesting the report for indications about the path of Fed rate moves. Kristen Bitterly is head of North American investments at Citigroup Global Markets.
So I think our expectation right now is that it's going to be in line with market expectations. We know that energy prices have ticked up higher. So provided that we don't see anything outside of what the broader market is expecting, I don't think the Fed's really going to change the trajectory in terms of September. So we think they're going to stay quiet for September, especially given some of the cooling in the labor market that we've seen. But November is really what the market is going to look towards.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Recapping, S&P up 29, again a gain of 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Jess Minton and Tim Stenovic here in the Bloomberg Interactive Broker Studio. I'm in for Carol Masser today, who is on vacation, hopefully enjoying sailing somewhere, Tim. I would imagine we'll probably see some pictures on Twitter soon.
Yeah.
I know. When is she going to invite us onto her boat? I can't wait.
I guess we can't all leave at once, right?
Right. But also kind of pivoting over here and looking at what's happening, because you were talking earlier about obviously what's happening in the tech semiconductor space today. Ahead of Apple's highly anticipated iPhone event on Tuesday, Qualcomm did announce today that it will supply the company with 5G chips for its iPhone launch across the next 3 years. The agreement suggests that Apple is having difficulty developing its own wireless semiconductors, but there are indications that Qualcomm still expects Apple to eventually use its own internally developed semiconductors. So to dive deeper into this, we're pleased to have back with us Mark Gurman, Chief Technology Correspondent at Bloomberg News, on the phone in Los Angeles, along with Anurag Rana, Senior Technology Analyst at Bloomberg Intelligence, on Zoom from Chicago. Mark, I'm going to start with you. You wrote this story about Apple and Qualcomm on the Terminal with Ian King earlier today. Walk us through this and what we need to know about the latest developments here with Qualcomm as well as Apple.
So for the past several weeks, Qualcomm and Apple have been in negotiations about extending their supply agreement for 5G modems. Qualcomm is the best modem maker if you want 5G. Apple has the most expensive phones. They want phones that work properly, and so they had to give in here yet again and work with the supplier that they've been embroiled in lawsuits with, and quite frankly, just don't like. In Qualcomm, they have a new 3-year agreement. That means it's going to run for the next 4 iPhone generations, including the one to be announced tomorrow on Tuesday, the iPhone 15. And this will allow Apple to have proper 5G for the next few years. And this is also in response to Apple not being able to get their own internal modem up to snuff. They've been working on this since 2018. Their goal was to get that modem into the iPhone by now. It's going to take a little bit longer, and this reflects that.
Mark, based on your reporting, what's the holdup with the modem? What do we know?
There's a few things. There are battery life issues. There's also problems in certification. To get a modem to work, you need it to work just as well, if not better, than the Qualcomm chip. You need it to work in every country, on every carrier, across 3G, 4G, and 5G. That's clearly taken more time than Apple has anticipated. Qualcomm has been at this for decades. They're the market leader. They're the best. And so Apple really had to fold here if they want to continue selling what they consider to be the best phones.
I want to bring in Anurag Rana, senior tech analyst at Bloomberg Intelligence. He joins us from Chicago this afternoon. Anurag, in this story, and based on Bloomberg data, we see that Apple is Qualcomm's top customer. Nearly a quarter of Qualcomm sales come from just Apple, 22.3%. Does Qualcomm need Apple more than Apple needs Qualcomm?
From our side, it seems, for Apple's viewpoint, they're always looking to, upgrade their hardware so that they can do new and unique things, which we saw in the case of Intel. Now, from Qualcomm's point of view, I don't cover Qualcomm, but, I've heard from our analysts that, they are expecting down the road that they will be, decoupled from Apple. But, from Apple's point of view, it's not going to have material impact on financials anytime soon. And we don't think they're doing it to save any money. They're just, they just want to make sure they have the best equipment for their phones.
What about when it comes to so much discussion about Apple's reliance when it comes to China? How does this fit into that picture when you are talking about also Qualcomm?
I think Apple's reliance... Sorry, go ahead.
Oh, no, continue. I was just directing it at
from
you in case Mark was thinking I was tracking to him.
So, the China-Apple relationship is complicated, and it is, we'll figure out how it's going to be tested over the next 12 months. And I think I give credit to Mark because he talked a lot about it last week when the news came out that Apple's iPhone has been banned in some of the government agencies. From our side, Apple is very much dependent on everything China for its supply chain. It also generates about 20% of its revenue from that area. So China is very much important for Apple and its future.
Mark, is Apple actually successfully decoupling itself from China in any significant way? We see occasional headlines about moving iPhone production to India and whatnot. But as Anurag said, 20% of the company's revenue comes from the region.
I think move is actually the wrong word, and, it's a word that I've used many times, and so maybe it's my fault. But I'm not sure move is the word at this point. I think it's more so augment, because they're not tearing down any of the lines they have in China. Apple is still, believe it or not, in growth mode in terms of new SKUs, new types of products, more units in some of their product lines, AirPods, Macs, and iPhones in some regions. And so, they're adding more production lines in places like India, Vietnam, not necessarily tearing down those China lines. So I'm not sure it's fair to say a wholesale move or a wholesale decoupling has happened yet. It's certainly the goal. What I'm told is they want to move up to a fourth of iPhone production from China to elsewhere, but that really has not happened yet. And once they have enough lines and augmentation set up in other countries, then they may be able to pare back in China itself.
Hey, Mark, especially with the iPhone launch for the 15 coming tomorrow, what do we need to know heading into this event?
Well, certainly you can bet on it having a Qualcomm chip. You can also bet on the Pro models being produced in China, just to, flick towards what we're talking about today. But the big changes will be a titanium case, more durable, lighter on the Pro models, better battery life on some of the models. You'll also see thinner borders around the screen on the Pro models. In the lower-end iPhones, it's basically they'll be recycling last year's Pro features, the dynamic island and the 48-megapixel back camera and the A16 chip. So really something for everyone tomorrow. One thing to watch out for, I think, will be a little bit of a price increase in some of the Pro Max models. Also higher performance chips for the Apple Watch, which I don't think is going to spur any upgraders in the last couple of generations, but could be good to bring new people into the fold and people on older Apple Watch models, and also some new changes to the AirPods.
And Anurag, on the Bloomberg Intelligence side, what are you going to be watching for?
For me, it's only the pricing that I care about, frankly, because that's what's going to dictate revenue growth for the company, because unit shipments are going to be very tough to grow this, the next 12 months or so. We expect a very modest increase in that. But if we can get a good price bump in the Pro Max model, I think that can help Apple, grow their iPhone revenue next year.
What's a good price bump, in your opinion, Anurag?
I mean, I think 5 to 6% overall on a totality, the portfolio. Mark's mentioned maybe $100 more or so on the unit side, but we think if the portfolio itself can grow 5 to 6%, that's a very good, healthy growth for iPhone over the next 12 months.
Hey, Mark, any sort of one more thing in the parlance of Steve Jobs?
I'm not anticipating any breakthroughs or major surprises. I think it's going to be pretty cut and dry and straightforward. 4 new iPhone models, updated AirPods, the shift to USB-C, new Apple Watch Ultra, and the Apple Watch Series 9. And I think that's a pretty good event. Don't forget those 3 products, that ecosystem together, the iPhone, the Apple Watch, and plus the AirPods, that's 60% of revenue right there.
Wow.
So, based on that, most important event of the year.
Neither of you guys said anything about the Vision Pro.
There won't be anything on the Vision Pro tomorrow. Maybe they'll flick it or tease it in some respect, but you won't see any news or new demos or anything like that. Not till next year.
Anurag, in 20 seconds, is it even on your radar as an analyst covering the company?
Oh, the Vision Pro? Yeah, it's fun to talk about, but financially, it's not going to move the needles. AirPods itself is going to be gazillion times more important than the Vision Pro, even 3 to 5 years from now.
Well, I've bought a gazillion pairs of AirPods because I've lost them and they've run
That's
out of
why
battery,
it happens to me all the time too.
I'm a big believer they should move it from into the services category because of the recurring revenue that I and so many others provide to Apple as a result of us losing our AirPods.
I agree.
Hey guys, we love it when you join us. Really big thank you to both Mark Gurman, Chief Technology Correspondent at Bloomberg News, and also Anurag Rana, Senior Tech Analyst from Bloomberg Intelligence, joining us on the phone from Chicago.
Now let's get a check on the latest world and national news with Nancy Lyons in Washington, D.C.
Thanks, Jess. New COVID-19 shots could be in pharmacies within days. Today, the FDA gave its approval of a new round of vaccines, and a CDC advisory panel will be meeting tomorrow to determine who should receive the latest version. It's a day of commemorations, 22 years after the 9/11 attacks. Bloomberg's Irv Chapman has more on how the Pentagon observed the anniversary of when that building was hit by a jetliner, killing all of the people on board the plane and 125 service members and civilian employees.
A bell tolled for each of the fallen.
Petty Officer 3rd Class Daniel M. Caballero, United States Navy.
Defense Secretary Lloyd Austin eulogized all the victims of 9/11.
September 11th made America a nation at war. The wars in Iraq and Afghanistan have come to a close, but we remain relentlessly focused on combating terrorist threats to America.
Austin and General Mark Milley recall that the Pentagon remained open and in action even while rescue operations were in progress. In Washington, Irv Chapman, Bloomberg Radio.
President Biden is heading home from an overseas trip, and he will speak about 9/11 this afternoon at a military base in Anchorage, Alaska. U.S. officials are keeping a close eye on a meeting between North Korea's leader Kim Jong-un and Russian President Vladimir Putin. It's expected they'll be discussing a possible arms deal. The State Department's Matthew Miller says the fact there even is a meeting means Putin's war effort in Ukraine is failing.
We're going to monitor very closely the outcome of this meeting. I will remind both countries that any transfer of arms from North Korea to Russia would be in violation of multiple United Nations Security Council resolutions.
Again, the State Department's Matthew Miller. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long. Here at Bloomberg, we've got the Dow, the S&P, NASDAQ all pushing higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading in the green today with tech leading the way. Dow is currently higher by 89 points. S&P's gained 31 and NASDAQ rises by 1.3%. The U.S. 10-year yield at 4.28%. Gold is little changed, oil trading in the red, and Bitcoin is down by 2.9%. Among the main 11 S&P sectors, leaders were consumer discretionary and telecom. Energy was under pressure, and leaders to the upside in the Dow, 3M and Disney, while Walgreens and Chevron led to the downside. In the cable space, Disney and Charter reached an agreement, and in the chip space, Qualcomm rose 4% after Apple renewed their chip deal. In other news, CVS jumped intraday as Wolf sees the company regaining its 4-star quality rating, and Tesla rose 10% after getting a Morgan Stanley upgrade. Wrapping things up, Oracle reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
All right, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, just type Squawk, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, with just under 20 minutes to go before the closing bell here, taking a look at the S&P 500, up about 0.8%, with discretionary leading the way, up almost 3% there, especially when you think of names like Tesla in there that did get an upgrade from Morgan Stanley earlier today. But if you look kind of under the hood here, as you know, Tim, obviously central bankers in a blackout week this week ahead of the Fed's decision on September 20th. But we do have that CPI data that we continue to talk about due on Wednesday. And traders are also obviously waiting for Apple's iPhone 15 event that is coming tomorrow. So a lot of different things going on this week, but who better to join us now and talk to us about this than Doug Sioka, CEO at Caver Capital from Leawood, Kansas, joining us right now to break through what he's watching in the markets. Now, Doug, thanks so much for being back with us. Talk to us about your view on today's rebound after the S&P 500 did snap 2 consecutive weeks of gains last week.
Yeah, thank you for having me on. I mean, it's always encouraging to start Monday off on a good foot. I think, like Bill had mentioned, you corroborated as it relates to consumer discretionary between Tesla and Amazon, and obviously the Tesla move on the heels of a really strong upgrade from Morgan Stanley, kind of moving away just from the auto emphasis of the organization and kind of stretching out to what a lot of people knew it might have kind of widespread impacts across EVs, communication, and now, of course, supercomputing. So a little bit of a tailwind, maybe in the hopes that the last 3 weeks had taken a little bit of the wind out of the market sales and kind of preparing, like you said, for Wednesday and Thursday with CPI and PPI. But a nice start to the year, though the bonds are pretty flat across the curve.
Hey, Doug, good to have you back with us, by the way. It's been a long time since we spoke.
Yes.
So do you buy this? I mean, I know, that maybe you're not prepared to talk Tesla, but you brought it up, so I wanted to get into this because, I mean, it's up 9.9% right now. And Adam Jonas over at Morgan Stanley is saying that software and services revenue are going to become the company's biggest value driver. We're not talking about Apple here. We're talking about Tesla, an automaker. Right. Do you buy it?
Specifically about Tesla, like you said, Tim, we're kind of have a prohibition on diving into individual equities. I think what the market is looking for is substantiation on some of the thinness that's led the rally to this point. And you look at kind of consensus on EPS, about 250 next year, which is 18 times. And if you then strip out the biggest 10 companies in the market, well, they're only really trading at 16 to 17 times. So I think momentum being such a strong factor, it has been kind of riveting as it relates to kind of the broad application of some of these very large sort of FANG in the Magnificent Seven stocks. there is kind of an enduring interest in substantiating what's sort of taken the market to this point, and it becomes kind of the path of least resistance versus trying to delve outside of that Magnificent Seven to find other areas that could be catalysts for the sort of the last quarter of the year.
When we're thinking about three key areas, especially to Tim's point earlier, talking about seasonality in September, if we're looking at, say, the dollar, yields, as well as oil, the direction of those three, how crucial is that when you're thinking about the direction of where stocks could go as we try to close out the third quarter pretty soon?
Yeah, I think so much, as much as all three of those would be important, I think the dollar value is the most, right? I think you saw a really strong move in the dollar the last 3 weeks. That had a very negative impact on performance underlying U.S. equities. I think some of the enthusiasm around like this enduring continued growth in GDP. I mean, shoot, the Atlanta Fed right now is at 5.6% for Q3. That's pretty incredible at this point of the cycle. So if that is going to materialize, how does the Fed substantiate a pause? And if they don't pause and we have to see a little bit more tightening, that then brings in the fear that they over tighten, which can not just slow the economy, but cause us to go into recession. So the dollar is what we're watching most closely. It's a little bit of a key to the kingdom as it relates to the underlying value and direction of our dollars in both equity and fixed income.
Doug, talk to us about international. It's an area when it comes to equities that you're bullish on. Why?
Yeah, we are. So the valuation discrepancy, Tim, right now is pretty pronounced, a multi-year wise as it relates to EPS. The other thing that we've seen, right, and it's been kind of a two-speed recovery, right? There's not as much liquidity that has to come out of developed markets. We like EM as well, though China's just too big a wild card right now for us to get too super excited about. But we think given, number one, valuation, the disparity. Number two, the fact that we're seeing sort of less depths of extraction of excess liquidity overseas. The third thing is, and this is a little bit nuanced, when you look at individual equities overseas, they're not spending a lot of their cash flow buying back shares because a big part of their incentive compensation does not deal with restricted stock units, ISOs and NQSOs relates to stock option comp. So more is being paid back out to dividends, which provide a nice total return contribution, but also being reinvested into the businesses as opposed to being used to repatriate shares.
I know you're watching 4,500 on the S&P 500 as a resistance level. What are you watching as a level for support?
Yeah, great question. You know, we tend to think less in those terms and more on EPS. We just feel like at 18 times, such thin breadth in the market, 4,500 seemed like a very dependable level. We're now at sort of a proving point coming through Q3 where we expect to see an elevation of the profitability across the S&P 500 companies. If that's true, then Jess, I could definitely see the market taking 4,750 to 4,800 going through the end of the year and into next year. You got to understand, if you're an asset allocator, and we are at Tavar Capital, this is an environment that you crave, right? Because you have low conviction in equities broadly. You've got elevating volatility finally. You have equal or close to equal opportunity between both stocks and bonds, and certainly within stocks and certain industry sectors. And we're in a rising profit cycle environment. With a monetary policy, that last thing really important, monetary policy backdrop, whose likely next pronounced move is going to be accommodative.
What do you mean?
We're not at a shortage of ideas, is what I'm saying.
Yeah, talk about that, Doug. The idea that it's going to be accommodative. What do you think it's going to be, and how is it going to be accommodative?
Yeah, so if you figure just historically on average, the sort of the status quo period between when the Fed stops hiking and begins cutting is about 10 months historically. Now that's skewed, right? Because we went through almost 10 years, right, coming out of the global financial crisis till 2016, when 2007, end of 16, when the Fed started to hike. So we really feel like this is it's going to be the amount of the liquidity they took out of the economy going from 0 to 5.5% begets the patience that's required on that known lag between impact and implementation. So we really feel like they're in a wait and see period, which I think is probably exactly where they need to be. Not to be understated, this is not a partisan comment, but election years have very strong influences on rates. And the most near-term example goes back to 2016, where there were 4 hikes that the market was pricing in, and we got none. So I do think we will have kind of wait and see, and ultimately what ends up happening, and this is a very strong historical precedent, is once the Fed funds crosses above CPI, it tends to be a really good opportunity for fixed income assets. And that's there's one or two reasons behind that. Number one, that's gone too far, ultimately they have to cut. Number two, they realize, right, if they went so far that they actually go into recession, that's really positive for a lot of asset classes, notably bonds.
Doug Sioka, We love it when you join us. Thanks so much for taking the time. Doug is Chief Executive Officer and Partner at Kavar Capital Partners, joining us from Leawood, Kansas this afternoon. This is Bloomberg Business Week.
Connection lost.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. All eyes will be on Cupertino tomorrow morning when Apple rolls out the iPhone 15. Mandeep Singh is a senior tech analyst with Bloomberg Intelligence.
I think with Apple, you have to think about the features they're going to introduce in the phone, and it's not a guarantee that we'll have a big upgrade cycle. That's why these events are so important, because time and again we have seen the big upgrades come when they introduce new features, whether it's a camera or something else in the phone, and there has to be that element that's going to rush people to, upgrade their iPhones, and it's not a guarantee.
And the other big Apple story today, it is extending an agreement to get modem semiconductors from Qualcomm for 3 more years, a sign that its ambitious effort to design the chips in-house is taking longer than expected. And with more on that, here's Bloomberg's Ed Ludlow.
Yeah, what's interesting going into this Apple event is that we believe the iPhone 15 that was to be launched tomorrow would be the last generation that used a Qualcomm modem chipset. Well, based on the agreement that's out this morning, that is not the case, and Qualcomm will be the modem supplier for the next 3 years and 3 generations of iPhone to come.
And we've got Qualcomm up right now by just about 4%. Apple shares, they're advancing by 0.7%. J.M. Smucker agreeing to acquire Hostess Brands, the maker of Twinkies snack cakes, for about $5.6 billion, including $900 million in debt. Those are our top company stories at this hour. I'm Charlie Pelletan. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenivek and Jess Menton. We're live in the Bloomberg Interactive Brokers studio. Jess in for Carol Massar this afternoon, who is on vacation. Wow, look at this. Hannah Levitt out with a story about Jamie Dimon over at JP Morgan. He's, again, taking aim at higher capital requirements, Jess, that U.S. regulators proposed for the banking industry back in July, saying he would, quote, love to know what they really want to accomplish.
And requiring U.S. lenders to hold more capital than their international competitors, he says, is a, quote, huge negative over time. And so when he's talking about that at a conference hosted by Barclays today, not surprising, though, when you think about a number of these chief executives in recent months, especially after what had happened earlier this year in mid-March and later on in the spring with a lot of those more smaller regional banks under pressure. But when you think about some of these bigger banks, when it comes to some of these capital requirements, and also when the Federal Reserve also has their stress tests, you're going to hear Jamie Dimon have those comments.
Yeah, this is really interesting. Here's what he said. He said central banks are, quote, the ones that told the world rates aren't going up. So if I were them, I'd have a bit more humility over stuff like this. He's not mincing words here. U.S. regulators' long-awaited plans would require banks to set aside more capital tied to an international overhaul that began in the wake of the 2008 financial crisis. Dimon has repeatedly called the proposal hugely disappointing and warned that the measures will make certain activities such as mortgages and small business lending, Jess, harder for banks.
And this was key, too, because we keep talking about the trajectory of the economy, how Americans are spending. He did say that the health of U.S. consumers and businesses is, quote, pretty good. And then he also added that excess savings are normalizing. So even though the CEO did warn for more than a year that while the U.S. economy is in good shape now, there are significant headwinds, including what he has continued to reiterate, different geopolitical tensions. And so talking about that once again when you are looking more globally, Tim.
Check out this story on the Bloomberg Terminal and at Bloomberg.com. And before we do head over to our TV team, another one of the most read stories is about Kyle Bass, who says the U.S. banking industry is going to lose hundreds of billions of dollars from exposure to the office market, this amid shifting workplace trends and elevated interest rates. A lot of people are arguing that we still haven't seen the repercussions of the way that workers in the U.S. are working differently. Check that one out on the Bloomberg Terminal and at Bloomberg.com. Just a couple of minutes away from the markets closing here. Coming up next, we're joined by our Bloomberg TV team for our cross-platform coverage on radio, TV, YouTube, and Bloomberg Quick Take. Beyond the Bell starts now.
Steve, we still love you. Steve Chivarone there over at Federated Hermes, helping us count you down to the close. We're moving closer to those bells. Stick with us as we take it to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with our friends Tim Stenivek and Jess Menton, who's filling in today for Carol Massar. Welcome to our audiences across all of our Bloomberg platforms. Tim, we have to start off with really the most consequential question of the day. Did you get your Popeyes chicken sandwich?
I was actually not able to leave the desk.
Okay.
Yeah, I haven't gotten up since I saw you.
After the
All right. Well, last time we talked to you, the markets were higher. They are still higher, Tim, on this day. In fact, setting up for what's going to be a pretty strong day, at least if you're in the NASDAQ.
I guess my question is, how much of this is just about Tesla up 10% thanks to that Morgan Stanley upgrade, Jess? I mean, look at this. It's pretty mind-boggling to see. It's accounts for 8 points in the S&P 500 right now.
Right, so sixth biggest weighting there when you are looking at Tesla and that upgrade from Morgan Stanley. So it is going to sway some things there, and especially when you are looking more broadly at what the discretionary sector is doing, up more than 2.5%.
I'm sorry, can I just punch back at Tim for a second?
Of course.
Amazon's up 3.5%, Meta's up 3%, Microsoft's doing well, up 1% on the day, Qualcomm up 4%. You got some other heavyweights out there. It's not all just Tesla.
That's true.
Qualcomm's weighting, though, in the S&P 500 is much smaller. It's only about
about 0.3%.
Those are some familiar names that we see moving the markets.
You've heard of
quite a
Amazon,
bit.
right?
I've heard of Amazon.
Okay,
Apple's got this event tomorrow, and I guess Qualcomm chips are now going to be in the phones.
Now, are you going to line up for the iPhone? What is it, Apple 15?
iPhone 15, yeah.
If I can get a chicken sandwich also.
For 2 hours? What's the line for the Apple iPhone?
Do people still line up for them?
I don't know. No one.
I don't think so.
I don't know if that's still a thing.
I was going to make a disparaging comment, but no. Hopefully not. No disrespect to anyone who would stand out in line for a telephone. All right, let's get the closing bells here. Your numbers here on the Dow Jones Industrial Average. Green across the screen with the Dow Jones Industrial Average up more than 80 points, or about 0.25% on the day. The S&P 500 higher by 30 points, or 0.7%. The NASDAQ going to finish the day strong, up by about 1%. Yes, on the back of some pretty big gains by Tesla here on the day. And the Russell 2000 not to be left behind. It is the relative laggard, but still in the green by about 0.2%.
Yeah, if we take a deeper look in the S&P 500, more than 300 stocks moving higher, 302 stocks advancing, Scarlett, 197 of them declining.
So, Tim, you were asking rhetorically, is it all just Tesla? And when you look at the sector performances, look at that line at the top. That's autos and components. It's got about 5 members. 3 of them are down, Ford, Aptiv, and General Motors, and 2 of them are higher. Tesla up by 10%, so that accounts for that group's 8.3% jump. Retail is also higher, that would be Amazon. And you can see that you've got, 5 groups gaining at least 1%. On the downside, energy taking a bit of a breather off at 1.4%. This is the best performing group over the past 3 months as oil prices have slowly made their way higher.
All right, well, let's go through some of these gainers. Maybe this will be the last time I mention Tesla in the next few minutes, but I had to put it on the board today. Finishing the day up more than 10%. Adam Jonas over at Morgan Stanley upgrading Tesla, raising his price target to $400 from $250. He says that Tesla's Dojo supercomputer for training automated driving systems can add up to $500 million to its enterprise value. That's through faster adoption of its robotaxis and network services. I'm still waiting for those robotaxis, and I think a lot of people are from Tesla, even though Musk has been talking about those for years. Jonas did say that software and services revenue.
Talk to, though? I mean,
Sorry?
If there's no driver, who do you talk to?
Elon?
Sorry? Oh,
Yeah,
that should be fun.
Yeah, just do it through X. I think you can do it through X. He did say that software and services, Adam Jonas over at Morgan Stanley. Okay, I'm going to move on. Is going to become the company's biggest value driver. Qualcomm shares finishing the day up by 3.9%. Apple expanding its agreement with the company to get modem semis from Qualcomm for 3 more years. Apple is Qualcomm's biggest customer. According to Bloomberg data, more than 22% of Qualcomm revenue does come from Apple each year. Those new iPhones that we're going to see tomorrow, they're going to have Qualcomm modem semiconductor chips in them. And then I missed an opportunity. I think this was why the markets were overall higher today. Hostess Brands, Twinkie.
Clearly.
The maker of Twinkie, Ding Dongs, and more. Up 19% today. J.M. Smucker, they want it. They agreed to acquire the company for $5.6 billion. It includes $900 million in debt, 22% premium to Hostess's closing price on Friday.
And I just want to add just one to your screen there. A lot of the marijuana stocks were actually on fire today, and I think that seems to be all tied to optimism that they're finally going to pass some legislation here in the U.S. That would basically allow banks to transact, allow marijuana companies to transact using their systems. Yeah, like Canopy up 74%, wow. Aurora Cannabis up 62%, and as a group, one of the main ETFs that tracks it was up 18% on the day.
That would be huge for the industry. I mean, up to now, these shops have had to transact in cash, and it's a huge liability for the companies. The banks don't want to touch this stuff because of the federal regulations around marijuana and the way that the federal government looks at it. So this would be a huge win.
And piggybacking off of what Tim was talking about with Hostess Brands and J.M. Smucker, unfortunately, if you look, J.M. Smucker shares today down about 7%, so this is his worst day since May of 2022. So when you're thinking about what the difference is there, investors were thinking the deal would come in around $4 billion. It actually was higher than that at around $5.6 billion. So that's why you're seeing a divergence between those two stocks. I also want to point out RTX. This is an aerospace and defense company that's stocked down about 8%. Its worst day since July 25th. So it did cut its full year's sales outlook and will take roughly $3 billion charge in the third quarter as it tries to deal with this financial fallout from the latest flaw in a marquee commercial aircraft engine. And then lastly, Newell Brands. So this is a company that is going to end up being, has an S&P 500 demotion. This is going to happen before the start of trading on next Monday on September 18th. But if you look at that stock down about 6%, its worst day since May 1st. And this is a company that is tapped for demotion from the S&P Small Cap 600 Index.
All right, Jess, I do want to talk about what's going on in the yield space because, frankly, actually not a whole lot was going on in the yield space here on this day. You talk about the 2-year yield right now still stuck around 4.9 there. So you saw a slight tick down in Treasury yields there. The 5, the 10, the 20, and the 30-year all moving higher. But I was just taking a look real quickly here at the trading ranges here. At least on the 10-year, this was the tightest trading range that we saw on Treasuries on the 10-year, going back at least to late 2021. Certainly the tightest trading day of this year in 2023. I'll double check the numbers, but this could be the tightest trading range really that we've seen in almost 2 years.
Yeah, it feels a little bit throwback to have Treasury yields not do a whole lot and move by maybe 2-3 basis points, if even.
Yeah.
And of course,
remember, this was like the most volatile sector of the market for a while.
They were like meme stocks for a while. I mean, this is all in the lead up to the big CPI report tomorrow, right? Which is expected to show that on a month-over-month basis. Yeah, sorry, 2 days from now. I'm just excited because of CPI.
Bad news, Scarlett. It's only Monday. I know. It might feel like it's later in the week.
I was hoping. Well, I'm looking for catalysts here. Actually, you know what? We do have one because Oracle just reported results.
Yeah, getting those Oracle numbers crossing the wire right now. Adjusted EPS for the quarter coming in at about $12.5 billion. That's pretty much on the nose for what the street was expecting on average. As far as the adjusted EPS, that's coming in at $1.19 a share, which looks like a modest beat. The street on average was looking for $1.15. Operating margin also coming in line at about 41%, and adjusted operating income at $5 billion. Here's your cloud infrastructure number, the revenue number that everyone's looking for. 66% growth in the first quarter. Now remember, the previous quarter was actually at around 75%, so a little bit of a slowdown there as the company really is now trying to balance out, I guess, some of the longer term potential for AI and what that could mean for the cloud infrastructure business, and of course the legacy business, which is still going to have to rely on as he tries to bridge that gap. You see the shares down about 3% here in after-hours trading.
Well, Oracle Chair and CTO Larry Ellison out with a comment about AI, Romaine. Here's what he says. Is generative AI the most important new computer technology ever? Maybe. Self-driving cars, molecular drug design, voice user interfaces. Billions of dollars are being invested in AI. As of today, AI development continues. AI development companies have signed contracts to purchase more than $4 billion of capacity in Oracle's Gen 2 cloud. He's got a whole paragraph just here on AI.
Is that, but when we talk about that, is that continuing? I mean, is this like a one-off where these companies get the benefit right now because everyone's experimenting with it? Is that a long-term jump in revenue?
I mean, was it Gina Martin Adams on Surveillance this morning talking about AI with some of these consumer companies? Yeah, like it's like, I mean, Hostess in the context of Hostess and J.M. Smucker. Like, you know, everybody wants in on AI.
She was talking about how that could help their consumer brands there.
We could all use some AI in our lives, I guess, to make things a little smoother, but there's going to be a lot of talk, a lot of general pronouncements of how exciting this is without a lot of detail. And this is what the sell-side analyst, Romaine, was telling us earlier on Oracle, and something we'll dig into a little bit later on with the instant reaction.
Yeah.
But there's going to be a lot of general vague talk.
General vague talk, but at some point the fundamentals have to catch up. You're talking about a stock now. It was up 50 prior to today, prior to the after-hours trading, up 55%. It closed at a record high. So we're talking about outsized gains, not just for Oracle, but for a lot of the other peers in the AI space. And are they actually showing longer term, not just revenue growth, but longer term profitability from these investments?
And what that could really mean for those types of companies moving forward, especially to Tim's point when Gina Martin Adams was talking about how that can really correlate to what some of those companies mean for their business.
I understand. What's the AI correlation with Hostess and Twinkies and all that?
She's talking about how you can use that as far as when you're talking to their customers and also trying to get a sense of what they're looking for, and then you can really offset that as some of the other hurdles. Yeah.
You mean like sugar and flour?
How many Twinkies? How many Twinkies they want? And so, I mean, maybe if you're Popeyes, you're not going to, expect 60 chicken sandwiches instead of and end up with 1,000.
So we can optimize things better, but okay.
All right.
Is that going to encourage people to buy more Twinkies, though?
Obviously, we're not there yet.
I mean, so you need like a supercomputer that costs like $1 gazillion just to determine whether or not Tim Senevic is going to stand in line for a chicken sandwich?
Chicken sandwich, yes. Twinkies, no.
Yeah, I haven't had a Twinkie in a while. How about you,
either? All right, maybe I'll bring you one tomorrow, Romaine. We got to run.
Like Little Debbie.
You guys got a lot to do. We got a lot to do. That does it for Beyond the Bell.
I don't know.
I didn't even hear your question. What was it, Romaine?
Never mind, Tim. We have to go.
Okay, I'll see you later. Our cross-platform coverage of the market close on Bloomberg TV and radio, Bloomberg Originals, and on YouTube. Catch us, though, tomorrow, same time, same place. Bloomberg Originals and on YouTube. Acquire Hostess brands. They make ding-dongs, Twinkies, Zingers, I haven't had any of those in a long time.
It's been a while.
Yeah,
since
it's been
I've
a while.
had any of the above there.
Should note, this coming after Campbell's Soup moved to bulk up last month when it came to shelf-stable aisles. Saying goodbye Sovos Brands, they make Rayo's tomato sauce. That was a $2.7 billion deal. And then we got the IPOs coming in the wake of ARM filing its S1 earlier this month. Instacart and its backers set the stage for an IPO that could value the grocery delivery business at as much as $9.3 billion. That's less than a quarter of what it was worth at the height of the COVID-19 pandemic. Leanna Baker is managing editor of the deals team here at Bloomberg News. Bailey Lipschultz is equities reporter for Bloomberg News. He covers a lot of these IPOs. Both are with us right here in the Bloomberg Interactive Brokers studio. Leanna, I want to start with you. Is it really a merger Monday? It feels like it.
I would say when there's a brand that people have actually heard of getting acquired, let's call that a merger Monday.
And Hostess is a brand that we've heard of.
Definitely. And it's been sold and bought many times before. It's gone public through a SPAC before SPACs were popular. That's something Bailey knows well. But in 2016, it did go public through a SPAC. So I think this is a good outcome for them. We were a bit surprised that J.M. Smucker kind of came in to win this one. There were other names rumored to be around it.
Wow, who knew that ding-dongs and Twinkies and zingers were all the rage?
It's all coming together now.
I mean, Bailey, can you speak to that? Like, what's the deal with the shelf-stable stuff that these companies want in? And I mentioned Rayo's tomato sauce, which, I mean, I think we can all agree is actually delicious.
I mean, I'm not a big fan of Twinkies, to be completely honest, but I do think it's part of just expansion and ability to grow. And like when you look at this, as Liana mentioned, my favorite D-SPAC of all time, because no one knows it's a D-SPAC, that along with Utz. But when you look at some of these deals in the reception from Wall Street.
Food brand.
Exactly, yeah. Utz, DraftKings. But if you look at the reception from Wall Street, optimism from the acquired company, but not so much the company actually buying it when you look at SJ and worst performer, or one of the worst performers in the S&P this morning.
So why was that?
Could be ARBs. Is it ARBs, Liana?
When you see companies do big bets, the buyer stock often goes down. It's just, what happens in a more gangbusters M&A market. That's when you'll see buyer and seller stocks go up on deals. That's when we say deals beget deals. It definitely is a big bet for J.M. Smucker. I would say it's a bit of a surprise to the market because other names had been linked to Hostess and not this one. Although Uncrustables was getting a lot of press in the
Okay, those are good. All right, can we agree on Uncrustables are delicious? They're set to be $1 billion brand in a few years. Just Uncrustables.
So I wonder what they could do with Hostess. Maybe there's some, collabs they could do.
Jess, have you had Uncrustables?
I have not. What is this?
It's like a peanut butter and jelly sandwich that comes in what looks like a pita that's really sweet, and you keep it in the fridge. Did I do a good job?
No, that's perfect. If you pop them in the freezer, they're even better.
Okay. Well, I need to get in on this.
All right, so Leanna, are we? We haven't talked to you since Labor Day, and the whole idea here was that there was going to be this big surge in M&A and IPOs and deals. You lead the deals team. Is that happening?
So I think we're seeing some positive signs. If you look at the Hostess deal today, it's being funded by bank debt. There's traditional banks funding this deal. That's a great sign. It's not like some bespoke private credit situation. So the more we see financing come back for these big deals, that is a supportive signal that we could see more. After Labor Day, I don't think we are expecting a huge boom in M&A, although with the year, with only 4 months to go, there's not a lot of time to get all these deals done. But I would say the IPO market is the one to watch now. That is where all the activity will come from for the rest of the year.
Well, speaking of IPOs, because that's something Bailey is all over, talk to us about the number of IPOs that are coming along the pipeline here.
Well, we've got ARM, which is expected to price post-market Wednesday, debut on Thursday. Expectations for early to mid next week. The same thing happening with Instacart. Obviously, that is a household name. SoFi is one of the underwriters selling it to retail traders, so expect a lot of excitement around the name. Granted, the valuation is, as Tim mentioned, more than a 75% haircut based on the high end of that range.
Wow. What happened?
COVID ended, really, to be honest. When you look at some of the growth, when you look at the underlying fundamentals and talking to people who are looking at these things, a lot of the transaction volume has slowed. They turn profitable. They have 5 quarters of profitability, but the big focus is how can you continue to expand growth? And when their number of transactions, their transaction size is actually staying pretty modest in terms of growth, expectations are maybe not that it's going to be gangbusters. And Liana, I'm sure you could speak to this. This isn't necessarily an IPO, at least from my sources, that it's coming from a time of strength. It almost feels like a need to get on the public markets.
Instacart is one of those companies that has been flirting with going public for years. There's a ton of VCs behind it, and they've ousted their founder. There's been a lot of drama there, so it'll be a welcome event for the VC community to have this one out there. And there's many more companies waiting in the wings. On the same timeline as Instacart is another company called Klaviyo, which the valuation isn't that much different than Instacart, but no one's heard of it. Klaviyo with a K, but it also has VC backers, and I think that's an important one to watch because it's more of a bread and butter tech IPO, and the class of 2024, the IPO class, could do big numbers if we see names like that do well out of the gate.
When you think about Instacart and potentially cutting its value to around $9.3 billion, is that more unique to that particular company, or is that something that you think these other firms that are trying to go public could face those issues as well?
I think Bailey mentioned it, how COVID ended, and that was hard on Instacart. So I think that's an Instacart-specific situation. Their internal valuation had been around $13 billion last fall, so $9 billion isn't that much of a drop, and it could still go higher depending on how demand is going. The roadshow's only starting today, so they have a week to meet with a lot of long-only investors, and maybe there will be pent-up demand, and it'll do well. Maybe it'll be worth more than $10 billion. So we'll see. Those first-day pops are going to be something that the investment bankers are going to try to engineer. So this will be a successful, fall class.
Well, Bailey, speaking of roadshows, the chip designer ARM considering raising the price range of its IPO after meeting investors, and it could still be the world's largest listing this year. So kind of an opposite story there. What's going on with ARM now?
Well, as the deals team has been all over, you look at this is an offering that's already on terminal oversubscribed by 10 times. So you're looking at this demand, you're looking at the valuation. Actually, what they flipped at was smaller than many on the street were expecting, smaller than SoftBank actually bought back the chunk. That was valued at $64 billion. So it seems like, again, talking to people in my conversations, maybe a little bit of an under-promise, over-deliver, and that's why you're looking at expectations around a lot of excitement. SoftBank not selling a ton of the stock, also having strategic investors, which can help really firm up the debut, firm up that day one pop that Liana was mentioning, which obviously gets excitement, gets the headlines, and gets more deals potentially off the sidelines.
So is that an optimistic sign over the next year that potentially we could see more of these deals down the pipeline? Obviously, when you think about the backdrop of how many issues there have been because of higher rates and things like that, we only have about 40 seconds left. But do you think that this is an optimistic signal, or what else is ahead?
I haven't talked to anyone who's not optimistic about at least the first half of 2024. That really is consensus, especially ahead of an election. It seems like the fundamentals are there and there's interest there for both buyers and sellers to get out at the start of next year.
I'm curious, do you think that that would really tell us that there is a recession on the horizon if you have something like this happening in the economy?
It's hard to say, but it can't get any worse for IPOs right now. Like, there just haven't been many, so everyone is optimistic that if there's some IPOs, that's going to be, a really good sign because there's been nothing to really compare it to.
I mean, this is the managing editor of the deals team talking. Like, she wants to see some deals, so I get it.
She's ready.
Leanna Baker, managing editor of the deals team here at Bloomberg News. Bailey Lipschultz, equities reporter for Bloomberg News, covers IPOs, covers SPACs, and more. Really appreciate you guys joining us this afternoon from the Bloomberg Interactive Brokers studio. You're listening, you're watching Bloomberg Business Week. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. We're keeping an eye on Oracle shares after hours. They are down by 5%. Oracle did report cloud sales growth that slowed in the quarter, dimming enthusiasm about the software maker's expansion efforts in cloud computing. Cloud revenue, a growth bet that is closely watched by investors, jumped 30% to $4.6 billion. An up Monday for the Dow, the S&P, and NASDAQ. Stocks rose ahead of economic data that will help shape Wall Street's views on how close the Fed is from ending its rate hikes. S&P today up by 30 points, a gain of 0.7%. The Dow up 87, up by 0.25%, while NASDAQ, the composite index, up 156, a gain there of 1.1%. Spot gold today higher by $3.50 the ounce to $19.22. That is a gain of 0.2%. A retreat for West Texas Intermediate crude today down by about 0.3%, $87.30 for a barrel of WTI. So again, recapping an up Monday here. Oracle after the bell. Oracle shares now trading lower by roughly 5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. Bloomberg Business Week is brought to you by Glenmead. Glenmead offers sophisticated wealth and investment management solutions combined with the personalized services you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more.
Well, it's a privately held company. They've got a valuation of more than $60 billion. It's got the largest share of the U.S. fast fashion market. That's according to data from Bloomberg Second Measure. It's backed by investors including Sequoia Capital China and Tiger Global, among others. And last month, it acquired a stake in its rival fast fashion retailer, Forever 21. It seems like everywhere you go today, you hear about Shein, the China-founded but now Singapore-based fast fashion retailer. We're very pleased to have with us Peter Pernod-Day, U.S. Head of Strategic Communications at Shein. Peter's with us in the Bloomberg Interactive Brokers studio. Peter, how are you?
Oh, I'm doing well. It's so good to be here today, and I'm happy to share a little bit about our business.
Yeah, it's good to have you with us. It's pretty amazing the way that Shein has just come on the radar now. I mean, you guys say you have 150 million customers around the world. It's a rocket ship.
Yeah, I mean, we've seen extraordinary growth, and I think our customer-led model has really allowed us to resonate with our core customer base, and we've seen tremendous growth because of that product market fit.
So what's the status of the IPO plans?
We don't have any current plans to IPO.
Is that still a goal?
I mean, there are lots of goals for the business. I think that could be one of them, but there are no current plans to pursue an IPO.
Do you think, I mean, you have some very prominent investors, as I mentioned, Tiger Global, Sequoia Capital China. They want to see a return on their investment. Is there any path that's not an IPO for an exit?
I mean, I'm not aware of one, but I don't think we have any current plans to IPO. Our position is really to try to increase our connection to our customers and to further refine the on-demand business model and flexible supply chains that have allowed us to produce a really pioneering form of fashion.
Well, talk a little bit about that. What do you mean by flexible and fast fashion? I mean, just how fast are we talking here?
So the Shein model is premised on something we call the on-demand business model, and that marries two technologies. The first is audience engagement and measurement tools that we host on our website and mobile app. And this allows us to understand our customers and how they interact with our products, what they like, what could be trending. And then we can take that information and in real time, using a digitally empowered supply chain, we can produce garments to meet actual demand. And this has two effects. One, it dramatically reduces excess waste. So instead of producing thousands or tens of thousands of copies of a garment, we can produce between 1 to 200 and then see if it actually sells. If it does, we can produce more quickly because we have this digital connection to our supplier base. The second impact is it allows us to work with small and medium-sized producers. And this gives us a lot of flexibility. If one producer is busy or one producer goes down, we can pivot to another producer very, very quickly. And so the combination of these technologies has allowed us to produce a really pioneering model that we call the on-demand business model. Now, your question is to time. It can be as short as 10 days. It can be as long as a month. It really depends on the particular design.
Are you guys using AI at all?
We don't use AI. And I think one of the things that we've talked a lot about in the last couple of months has been that our model is really an example of augmented intelligence. So we're using solutions like machine learning, which is a species of AI, and then we're marrying that to an analog supply chain. Oh. And that analog supply chain is still someone who has to actually make the garments, who has to load it onto freight shipping, has to deliver it. And that's something that we've optimized through this augmentation with machine learning.
Talk to us about some of your other goals, because I know one of them was trying to move more of the production outside of China. Where do you stand on that at this point?
So one of our key goals is to become a localized company. And what that means is we want to be closer to our customer bases and their core geographies. So we've established a major presence in Europe. We've established a major presence in Brazil. We obviously have had a long-standing presence in the United States. And what we've done to augment that is back it up with some infrastructure. So we've begun to work with manufacturing partners in Turkey. We've begun to work with manufacturing partners in Brazil. We're exploring other geographies. And this allows us to be closer to our customers, both in terms of our corporate business, physical retail, not physical retail, but things like marketing, HR, legal departments, but then that's backed up by an infrastructure that includes shipping, logistics, and possibly contract manufacturing.
Well, speaking of physical retail, I mentioned the stake that you acquired in the rival fast fashion retailer Forever 21. Part of that was establishing a brick and mortar presence here in the U.S. Talk to us more about this partnership. I mean, how does it benefit Shein, and are you going to be looking to do deals with other U.S. companies?
So I think that the Spark deal that includes Forever 21 was a tremendous opportunity to find synergies between brands that really are interested in being customer-led. And I think that's what drew us together, is there's a strong customer centricity to both of these brands. It's still early days, and so we don't know exactly how things will shake out, but it is possible that you will see some exciting collaborations around physical retail, which would be an extension of some of our pop-up stores that we've launched. We did about 40 in 2022, so this could be an extension of that model.
Are there other partnerships that you're planning to roll out soon?
Well, we've recently launched a marketplace model, and we're always looking for new brand partners who are interested in our on-demand capabilities, who are interested in our customer-led focus. And so we never say no to potential brand partnerships, but I don't have anything specific today.
I got to ask about some of the controversy that's surrounded the company, of course. There was the influencer trip to China. Whenever we talk fast fashion, there are concerns about the environment. You brought up some of those concerns about the environment. There's been the discussion about the use of forced labor when it comes to producing these garments. What is Shein doing right now to clean up its image here in the U.S.?
So I think the first thing that we're doing is correcting misperceptions. We have zero tolerance for forced labor. We do not have any contract manufacturers in the Xinjiang region of China. We have a comprehensive supplier management program that includes audits, codes of conduct, third-party testing using radioisotope analysis. And so we're really trying our best to make sure that we are a responsible global brand. And I think in terms of some of the other criticisms, we would say that we are working to address our growth as a business. So that means investing in our ESG initiatives, it means investing in stable partnerships, and it means really sharing what we are as a company. Part of the waste less production that we do, the on-demand model itself, is I think something that can add an important piece of the conversation to sustainability. It's not the total solution, and work remains to be done, particularly on post-production waste, but I think our model is something that could actually be a template as we move forward in the future of garment production. So I think, to sum up, there's a lot of misperceptions about us, and we're trying our best to address those.
What does sustainability mean to you?
So for us, sustainability is about having both a financial component, which means something that is good for the business, and also a planetary component, something that's good for the planet. One of the examples in which we've tried to leverage this is a partnership with a company it's called Queen of Raw. And Queen of Raw uses SaaS technology to aggregate global dead stock supplies. And then we can go forward and purchase dead stock from other manufacturers and convert that into net new garments. And so this is a way to use material that would otherwise go to waste and put it back to productive utilization. And I think that's an example of sustainability, at least as we define it at Shein.
What's the biggest surprise to you about how the company markets itself and how people find out about Shein?
One of the best parts of my job is I get to travel around the world and talk to Shein customers, and I'm always amazed at how deep a connection we have with them. The number of customers who've come up to me and said, I love Shein, or Shein is a way that I can connect with my kids, and we buy matching outfits and we buy matching costumes. Or other customers have come to me and said that they love our pet offering and the way that our pet clothes allow them to engage with their pet in a new way. To me, that's the best thing. And I think it points to the success of our overarching value, which is we want to be customer focused.
What's the top question that you get from your customers?
So I think many of our customers are very interested in our sustainability. I think they're very interested in our social compliance, those two questions that we discussed earlier. I'd say those are two of the biggest ones that we get.
Do you offer any sort of clothing recycling program at this point?
We are exploring clothing recycling, and I think that could be a feature of our partnership with Spark, but I don't have a specific program at this current time.
Meaning we could perhaps envision something where you would bring in old Shein clothing to a physical location that would then be repurposed.
That's right, but beyond recycling, we have a peer-to-peer resale offering. This is something called Shein Exchange, and this is where Shein customers can go to our retail exchange, which is on our app, and they can sell back pre-loved clothes to other Shein customers. And since its launch, we've had over 1 million customers sign up to participate on this resale exchange.
Hey, Peter, really appreciate you joining us today here on Bloomberg Business Week. Peter Perno-Day is U.S. Head of Strategic Communications at Shein. He's live with us in the Bloomberg Interactive Brokers studio.
Now let's get a check on the latest world and national news with Nancy Lyons in Washington, D.C.
Thanks, Jess. A new COVID-19 vaccine is just a few approvals away. Today, the FDA okayed a reformulated vaccine that targets an Omicron subvariant. The shots are manufactured by Moderna and Pfizer. The CDC will now need to give its okay and its recommendation on who should receive this latest shot. The agency's advisory panel is meeting tomorrow. This is not actually a booster, but a new vaccine formula, and the government will not be buying all these shots, so doctors, hospitals, and pharmacies will need to order them directly. Most insurance carriers are expected to cover the cost. Special ceremonies have been held today in commemoration of the 9/11 attacks. A choir sang at the Pentagon after the names of the victims there were read. And families gathered at the 9/11 Memorial in New York City and also read the names of those lost in the attack on the World Trade Center.
James Marcel Cartier, Sharon Ann Carver, Vivian Kasaldik, John Francis Casaza, Paul Regan Cassie.
President Biden is in Anchorage, Alaska, returning from a trip overseas. He is now speaking about 9/11.
I join you on this solemn day to renew our sacred vow. Never forget. Never forget. We never forget. Each of us, each of those precious lives stolen too soon when evil attacked.
Biden noted he is returning to the U.S. from talks in India and Vietnam, which he says were aimed at keeping our nation safer. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. Oracle shares now down 5.2% after hours. Oracle reported cloud sales growth that slowed in the quarter, dimming enthusiasm about the software maker's expansion efforts in a competitive market. Also after the bell today, we're keeping an eye on shares of Tesla. Now, the stock rallied today by 10%. Morgan Stanley said Tesla's Dojo supercomputer may add as much as $500 billion to the company's market value through faster adoption of robo-taxis and network services. It was an update on Wall Street today with the Dow, the S&P, and NASDAQ all advancing. As for what was driving today's trading, Doug Sioka is CEO at Kavar Capital, and he was a guest right here on Bloomberg Business Week.
Between Tesla and Amazon, and obviously the Tesla move on the heels of a really strong upgrade for Morgan Stanley, kind of moving away just from the auto emphasis of the organization and kind of stretching out to what a lot of people knew it might have kind of widespread impacts across EVs, communication, and now, of course, supercomputing. So a little bit of a tailwind, maybe in the hopes that the last 3 weeks had taken a little bit of the wind out of the market sales and kind of preparing for Wednesday and Thursday with CPI and PPI.
And you can hear more of that conversation with Doug Sioka on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. So stocks higher today ahead of economic data that will help shape Wall Street's views of how close the Fed is from ending its rate hikes. 10-year yield 4.28%, with a 2-year yielding 4.99%. S&P up 30 points, up 0.7%. The Dow up 87, up 0.2. NASDAQ up 156, a gain there of 1.1%. Spot gold up $3.50 the ounce to $19.22. That is a gain of 0.2%. And West Texas Intermediate crude down 0.3%, 87.29 a barrel. So again, recapping, stocks higher today with the S&P up 30 points to 44.87, a gain of 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Jess Minton and Tim Stenovic here in the Bloomberg Interactive Brokers Studio. And Tim, it's been a busy few days and a few weeks here for President Joe Biden. He actually did unveil a series of semiconductor, aerospace, and infrastructure deals with business leaders in Vietnam, including executives from Vietnam and top U.S. firms like Boeing, Intel, and Marvell Technology. So President Biden was visiting Vietnam after attending a gathering of G20 leaders in India. Vietnam has been a place that has fought for years to prevent a communist takeover, as Washington is seeking to basically counterbalance, Tim, what we've been seeing happening here, especially with China and some of those tensions that have continued with the U.S. So who better to bring in here than joining us now is Nick Wadhams, national security reporter at Bloomberg News, on the phone from our Washington, D.C. bureau. Nick, walk us through these latest developments, especially when we're thinking about the chip space, aerospace, and then obviously infrastructure.
So this is a pretty big deal. I mean, for quite some time, the U.S. has been trying to pull Vietnam back much closer into its orbit, obviously doing a great deal to improve relations since the Vietnam War. But now it's much more about the push and pull with China. Vietnam had what it calls a comprehensive strategic partnership with China and India, and now it has one with the U.S. So what you're really seeing here is an administration that's saying, hey, don't just turn toward China, think about us too. And what he's now done is to try to cement that with a few of these deals. I mean, I would say by far the most significant is an understanding with Vietnam Airlines to buy up to 50 737 MAX aircraft, and that deal would be valued at almost $8 billion. So pretty significant way to put a little meat on the bone of this agreement.
Yeah, that's a huge deal. That's certainly a huge deal. I think when we take a step back, Nick, I'm wondering if we're seeing sort of a new world order emerge at this point when it comes to economics and power. Are we seeing China and Russia on one side and the U.S. trying to pull everybody else to the other side?
It's a great question, because when we ask the administration exactly that question, I mean, and I do about once a week, they say, no, we are not asking other countries to choose between us and China. But then they clearly are. And when you talk to them privately, they say, yes, I mean, this is a major competition now. We do not want countries like Vietnam going deeper into China's orbit. There's this feeling that the U.S. needs to do more, needs to bring more to the table when it does this, and it can't just come to these countries and say, hey, be with us, don't be with them, that they need to bring some real firepower, and that's exactly what Biden has done here. But that we're seeing this all across the region with various countries, and this is only just the latest example.
Does the U.S. and the rest of the world have what it takes to compete with China at every level? I mean, when it comes to airplanes, for example, it's only the U.S. and Europe that China has COMAC, but they're not really there yet.
Right.
So,
right.
When it comes to other things, though, apart from aerospace and defense, does the U.S. have what it takes to pull, other countries away from China?
Well, there are a couple of things. One is, raw materials, not really.
Yeah.
I mean, when it comes to like rare earth minerals and critical minerals, things like that, coal, all sorts of other stuff, in the raw materials sector, in a lot of ways it can't compete. The other thing is that what China has done is just really been willing to throw its money around for big loans, development loans, infrastructure loans. Sometimes those go very bad, but it offers terms that look very favorable at the beginning, lures other countries into these deals, and the U.S. is now sort of feeling very much behind the eight ball. So what you're seeing is an administration that's really trying to say, okay, we can enter into deals that have big price tags on them too.
As you know, the U.S. has considered those new curbs on AI chips exports when it comes to China, just because of concerns about what it could be for either weapons or hacking. When it comes specifically to the U.S.'s being so closely reliant to Taiwan's chip industry, just how reliant is the U.S. on that?
Incredibly reliant. I mean, I think, 80% of the world's most advanced semiconductors come from Taiwan, and it's a fascinating example because the U.S. really wants to boost its own production of those chips, but is just so far behind Taiwan. Taiwan is also an important ally, so it's like if the U.S. says, hey, we want to lessen our reliance on you, Taiwan's like, well, it's your reliance on us that basically keeps us so close in the security relationship against China. So you're seeing, the U.S. this real reshaping of the global order, both in the way the U.S. wants to reorient supply chains, but also needs to keep other countries on side with these very connected supply chains. So it's a real puzzle for the administration.
Hey, Nick, President Biden is right now in Anchorage, Alaska. He just finished up making comments on the 22nd anniversary of 9/11. He's meeting with troops on the ground right now. This following his trip to Vietnam, to India, the gathering of G20 leaders. Nick, was it a successful trip overall?
Well, I mean, when you come back with big ticket items like a nearly $8 billion deal, that can certainly be counted as success. The G20 was a bit of a muddle, though, because they really couldn't get any sort of agreement on something the U.S. really wanted, which was Ukraine. China's Xi Jinping was not there. Vladimir Putin was not at the G20. Biden really saw this as an opportunity, to fill that void, to really bring a sense of unity. And he came out of it with this sort of mealy-mouthed statement and commitment from other G20 countries. So in that sense, the one thing he really wanted, that unity around the war, a strong condemnation, he did not get. And that big symbolic loss is gonna dog him for a little while.
What's the next big geopolitical event that you're keeping your eyes on?
Well, the next really big one is just next week. The UN General Assembly holds its annual session. Biden will be there again. Xi and Putin will not be there, but you're going to see another of these real sort of push and pull scenarios where you're going to have world leaders tying up traffic around Manhattan for a whole week. It's going to be an absolute mess, but you're going to just see a real, again, the competition over Ukraine, a competition over China, possible conversations around political negotiations with Venezuela. It's going to be a real smorgasbord of all the big diplomatic issues of the day, and again, another chance for Biden when Putin and Xi are not going to be around.
Yeah, good luck crossing Lexington Avenue if President Biden's motorcade is coming, okay? The little pro tip, you can just go under the through the 59th Street subway stop to get to the other side if you get stuck outside the office like Carol and I did last year just before our show started. We had to wait, and we figured out a way. It's okay. Hey, Nick Wadhams, we love it when you join us. Nick Wadhams is national security reporter at Bloomberg News, joining us from our Washington, D.C. bureau. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. RTX Corp shares fell almost 8% today. RTX has cut its full-year sales outlook and will take a roughly $3 billion charge in the third quarter as the aerospace giant tackles the financial fallout from the latest flaw in its marquee commercial aircraft engine. And with more on the story, here's Bloomberg's Steve Rappaport.
Charlie, the company now expects sales in a range of $67.5 billion to $68.5 billion, down from an earlier forecast of $73 billion to $74 billion, and below an average analyst estimate of $73.6 billion. Pratt & Whitney, a unit of aerospace giant RTX, said in July that 1,200 GTF engines must be removed and inspected over the next 12 months. That came after the company discovered contamination in the powdered metal used to manufacture high-pressure turbine discs that could shorten their lifespan. RTX says the additional work required to remedy the issue will result in more aircraft being grounded. That may complicate efforts by airlines to increase capacity and flight service to meet steady post-COVID lockdown demand for travel. Charlie?
And that's Steve Rappaport reporting. JetBlue Airways has agreed to transfer some Spirit Airlines gates and flight slots at 3 airports to help lessen antitrust concerns over its pending acquisition of the low-cost carrier. JetBlue will shift all of Spirit's holdings at Logan International and Newark Liberty and part of its assets at Fort Lauderdale Hollywood International in Florida to Allegiant Travel. JetBlue previously agreed to divest Spirit's holdings at New York's LaGuardia. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
Hello, everyone. It is Bloomberg Business Week. Tim Stenivek and Jess Metton. She is Deputy Team Leader for U.S. Equities, filling in for Carol this afternoon. Let's now get a check on the latest world and national news. For that, we go to Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. The FDA today has given a thumbs up to the latest round of COVID shots. Bloomberg's Nathan Hager has more on what's next.
Following that FDA approval for the Pfizer and Moderna shots, the Centers for Disease Control is expected to hold an advisory meeting tomorrow on who should get them. The CDC director would make a final decision, and that would set up shipments of millions of doses to pharmacies, clinics, and other health systems within days. The COVID shots would arrive alongside seasonal flu vaccines, as well as inoculations for the dangerous respiratory virus known as RSV that can affect infants and older adults. In Washington, I'm Nathan Hager, Bloomberg Radio.
Today marks 22 years since the deadliest terror attack on U.S. soil, and 9/11 commemorations have been held at the attack sites in New York, the Pentagon, and Shanksville, Pennsylvania. President Biden is on his way to Washington from an overseas trip, but he did stop at a military base in Anchorage, Alaska, to speak of 9/11.
Well, every year we mark this hallowed day. It's never easy. To anyone here or anyone across the country who's grieving a lost child, parent, spouse, sibling, friend, or coworker. To all those who still bear the wounds from the searing September morning, I know how hard it is on a day like this.
Biden says the terrorists stole nearly 3,000 American lives, but they could not take the soul of America. Hurricane Lee has grown back into a Category 3 storm with 120-mile-per-hour winds as it spins about 600 miles south of Bermuda. It is forecast to gain strength as it continues to move over the warm Atlantic waters. The official forecast brings it southeast of Cape Cod, Massachusetts by Saturday. The death toll is now up to nearly 2,900 in Morocco, where a strong earthquake hit Friday. Despite the devastation, Moroccan officials still expect to host the International Monetary Fund and World Bank annual meetings that are set for Marrakesh next month. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Jess and Tim.
Thank you so much for that update, Nancy Lyons. Really do appreciate it. So, Jess, over the weekend, I was at a block party for the part of Brooklyn where I live, and I ran into my friend, and he introduced me to his brother-in-law. His brother-in-law was wearing a U.S. Open hat, so I said, hey, are you watching U.S. Open? Because I love talking tennis. And he said, I would, but we have Charter, and there's a blackout with ESPN, and there's been a blackout for the whole tournament. Ooh. So I've been watching it on delay, using some account. It's like, he said it's been miserable. And you know what? You wake up this morning, and we get a deal between Charter and Disney.
It's like it was meant to be.
Yeah, but, 2 weeks late for him, so